Good morning. Morning. First of all, Happy New Year for the commerce. This is the first day of the year for us, where our life begins with respect to all the things. So, by doing that, we'll continue our discussion on law. So, we'll try to finish up today. That is chapter 5, chapter 6, 8, maybe 9 also. Because 5 and 6 are very small, which might get completed before the breakfast break. So then we'll go for 8 is also another some 40 minutes category. 9 and we'll see if it is possible, then we'll get into 10 also. Hmm? A foreign company, that is some 15 minutes category. If you understand everything, that is exactly same repetitive process. So the next chapter which we are going to discuss is chapter 5, that is acceptance of deposits. So first of all, what is deposits? If you look at the sequence of discussion, beginning we discussed some important definitions of company and company related aspects. In the chapter number 2, we discussed how the company will come into existence. And in the third chapter, we discussed whenever company wants to raise the money, what are the sources or the methods available. The main thing they have to issue with respect to compliance parties, prospectus and other things. And in the next chapter, we discussed whenever you issue the prospectus, you issue prospectus mainly for the purpose of issuing the securities and raising the money. One of the way of raising the money for the purpose of doing the business is issue of securities. Then now we are going to discuss, after which we discussed management and administration, that is actually the 5 and 6, that is chapter 7. So how do we run the company? What are the requirements to conduct a meeting for the chairman, everything, notice, proxy, everything we discussed in chapter 7. But under chapter 5, it also tells whenever you want the money, there is another way of raising the money also, that is called as you can accept the deposits from the public. Sir, when you tell you can accept the deposits from the public, who are you? I'm talking about it. You can be a private company or you can be a public company. Both people can accept, both companies can accept deposits from not public, from the members or public. Sir, what do you mean by the members are public? See, there are some restrictions with respect to private company. There are no restrictions with respect to public company. If you are a private company, you can accept deposits only from your members. The people who are already part of your company, then you can accept deposits from them in the name of deposits. Then when it comes to public company, you can accept the deposits from the members also. You can accept even deposits from public also, who is an outsider. First of all, what is deposit? Deposit is nothing but it is a category of debt which is raised by the company. The name of it is in a different name. Like it is like what? New bottle and old wine, the similar category. The same debt only, the same money only, but in the new name. That is the deposits part. But the differential part for the debentures, which we discussed under which section? Tell me, debentures. 71. So the difference between that and this is the debentures, the mainly is maturity period is different. That can go from 10 years and some exception cases 30 years. But here the deposits can have a maximum life of 36 months, not more than that. Minimum to minimum 6 months has to be there and it can go up to 36 months. Sir, can we accept the deposits for lesser than 6 months? Yes, only for short-term funds. For less than 6 months we can still go, but that should be at least 3 months. Now, whenever we want to accept the deposits, do we need to pass a resolution? Do we need to conduct a meeting, shareholders meeting? What are those things? Those things which are mainly being discussed here. This is the entire overview of this chapter 5. So, definition. Deposit refers to any money received by a company as a deposit or loan or in any other form except for the amounts excluded by the rules set in the consultation with RBI. That means what is deposit? They did not give the definition. What is not a deposit? They gave a definition. If it does not fall under what is not a deposit, then it is a deposit. Deposit is a kind of deposit or loan or any other form other than the things which we are going to discuss in a bit of time. So this definition is an inclusive in nature. What is inclusive in nature? Whatever it is there, all these things are included along with some other things also. If it is related to the things, that will be added. That is covers mainly money received by way of deposit, loan, or any other form. So here the repayment is time bound because it is maximum 36 months you have to repay it, and the deposit can be secured or unsecured. But the moment you decided to go for a acceptance of secured deposits, you can secure only tangible assets. That means intangible assets like patent, brand mark, goodwill, trademark, all those things you can't keep it as a charge. Then there are some exclusions. So here it is an MCQ point. It is also an MCQ point. Private companies can accept deposits only from members. They can't go for other than members. Then public companies can accept deposits from members also as well as the public also. But there are some conditions. There is a condition with respect to percentage of deposits that can be accepted from the public. Then if you want to hold the deposits in a joint names, not jointly by husband, wife, children, everything, maximum you can hold up to 3% for a single deposit. Not more than 3%. This is also an MCQ point. And depositor can nominate any person at any time. Why? Because if something happens to the depositor, then who is going to receive that money at a later point of time? And every deposit is like a loan. That is why it has to be repaid with the interest. And companies may allow premature repayment of deposits also. If the company has any extra money, instead of 3 years, they might repay it 2 years also. Now we are going to discuss. This is one important category from deposits, but very rarely tested because it is so lengthier. They might test it in a part basis. What is deposit? We told any form of loan, deposits, or other form, but other than the following things. That is what we are going to discuss. What are the amounts which are excluded in the deposits definition? First one is, if you ask me in a general category, if you receive any money from any government, or any form of entity which is established by government, authority which is established by government. When I say government, as per the definition of government, there are only two governments, central and state government. Now we are adding central, state, and local government. And if there is any authority which is like parliamentary established special nature, for example, ICI, RBI, SEBI, if you receive any money from them also, that is also not a deposit. So first category is central government or state government or local authorities or any amount from sources guaranteed by central government. See, it is not directly receiving money from central or state government. You are going to a bank to take a loan, or you are going to somebody else, they are giving a loan, but for that loan is guaranteed by central or state government. That is also not as a deposit. Either the government is directly giving the money or government is indirectly giving the guarantee to get the money to you. That is also not guarantee. Again, amounts received from any authority constituted under the Act of Parliament, maybe ICI, ICSI, CMA, RBI, SEBI, etc. Not only Indian government, if you receive any money from foreign governments also, foreign governments or foreign international banks or multilateral financial institutions. What is multilateral financial institution? It is like a financial institution which is like MNC company with category, the Calitas, that is category of things. And foreign financial institutions, export credit agencies, collaborators, BC, citizens, authorities. In simple terms, if you receive even a single rupee from foreign also, that is not a deposit. That will be put under some other category. Then comes if you receive any money from banking company, State Bank of India or its subsidiaries, or NBI, notified banking institutions, or cooperative banks, public financial institutions, RFI, regional financial institutions, insurance companies, scheduled banks, amount received against commercial papers, instruments, papers issued by RBI guidelines. That means if you are receiving any money from any financial institution, maybe banking or other than banking, maybe public financial institutions, maybe regional financial institution, doesn't matter, that is not considered as a deposit. You go to a bank and ask, sir, I need 10 crore rupees for the purpose of purchase of a machinery. Isn't it a loan? Just because it is a loan, deposit definition also consisting of a loan word, deposit, loan, and other form. This loan is not that loan. That is totally different category. Because when you go to a bank, you can take loan up to 10 years also, 20 years also. But the deposit maximum period is only 36 months. That is why any money received here is not included there. And again, if you receive any money from intercompany loans, amounts received by a company from another company, we call it as intercompany transfer. Like Reliance Jio is there, Reliance Petroleum is there, Reliance Digital is there. Okay, one party is giving loan to other party. That is also not considered as deposits. Again, this we already discussed. Whenever you receive a share application money, within 60 days you should allot the shares. If you don't allot the shares within 60 days, then within next 15 days you should refund the money. If you don't refund the money within next 15 days, then share application money will be treated as deposits. Only then it is treated as deposits, unless until then it is not a deposit. It is then separately MCQ point. So share subscription or share premium money received for securities pending allotment. Pending is still allotment is still pending. However, if not allotted within 60 days, it will be treated as deposits if not refunded within 15 days. That means don't allot within 60 days. If you don't refund within next 15 days, then it is a deposit. Along with that, if you receive any amount from a person who is the director, was the director of a company or a relative of a director of private company at the time of receipt. That means, see, director giving loan or money to the company, public company, is not a deposit. Relative of director giving money to a public company is still deposit. But director giving any money or relative of director giving any money to private company is not deposit. For private company, definition is bit wider. For public company, definition is bit narrower. Because you can't go on telling it as somebody is relative or not relative, because public is so much. Anybody can do it. Only first or this line of relationship is considered for public company. For private companies, first and second line of relationship is considered. Relative definition part also. So any amount received from a person who was a director of a company is not. See, look at the language. Director of the company. That means any company. It can be private also or it can be public also. Direct first relationship. Or if you receive any money from relative of a director of a private company, not any company, then at the time of receipt, director shall provide a written declaration stating that amount is not sourced from borrowed funds, loans or deposits of from others. That means whenever you are making a deposit with a company, you should tell that you did not borrow money from somewhere else and making the deposit here. It is from your own money. And the company shall disclose the details of money received through the board's report. And again, any amount received by way of issue of secured debentures or secured bonds, which are other than charge on assets, excluding intangible assets, because intangible assets are not covered here. Secured even there, that is only tangible in the definition part we have seen. And if there is any convertible debentures converted into shares within 10 years, and non-convertible securities listed on a recognized stock exchange, all these things are not deposits. Other than these are deposits, whatever we are going to discuss. And if you receive any money from the employees which is not exceeding their annual salary in the form of non-interest bearing security deposit, that is also not deposit. And if you receive any money any non-interest bearing amount received or held in trust. For example, some party is there, he does not want to believe anybody, so he told, sir, you keep this money with you. You don't need to give the money interest on this. Whenever I come after 1 year or 2 years, please return that back to me. That means you are holding it in a trustworthy position. Trust and nambike. So then you don't need to consider that as deposits, because you are just a custodian of it. You can't use that money. It is not your money. Then any advances you give with respect to businesses are excluded. For example, whenever you want to take a Domino's or McDonald's franchisee or KFC franchisee, you should give some security deposit. So that is mainly for the purpose of business. If you don't give the advance, there is no business for you. So those things are not considered as deposits. So if you give advance for goods and services, sir, goods shortage aite ಬೇಕಂದ್ರೆ ಹೀಗೆ book ಮಾಡ್ಕೊಳ್ರಿ ನೀವು. Then he told, then I went and booked the goods. Then he sent the goods within 365 days. Then it is not a deposit. I booked today on April 1st. By next March 31st also he did not send the goods. Then after 365th day, that is 366th day onwards, it is deposits. If you give any deposit for advance for goods and services, if it is adjusted within 365 days from the date of acceptance, then no deposit. If not, it is deposit. Advance for immovable property, again adjusted as per the agreement or arrangements. For example, I wanted to buy an apartment in the building. What is this tower? He told, sir, next year April 1st you will get a possession. If he gives by April 1st the house, then that's okay, no deposit. If you don't give from next day onwards, it is deposit. He should give me interest. Everything has to be done. Again, if you give any security deposits for goods and services, for example, mainly the security deposits kind of things where it happens. Any case where you give a security deposit, mainly in case of hostels also. Whenever you are going for a college hostel or college admissions also, they'll take some security deposits. That if there is anything damage from your side, then they'll deduct that and they'll pay it. If that is the category, then it is not included here. For the fulfilling a contract related to goods or services. Then advance for long-term projects. What is advance for long-term projects? Any project which is having a period construction or this building period of more than 1 year is called as long-term project. So if you receive any advance for long-term projects involved in supply of capital goods, for example, government gold told, L&T company Larsen and Toubro that constructs the infrastructure road part, they told we want to construct that Bharatmala project. You know that road Bharatmala. Mala, you know that Mala? The similar way, they're constructing a road from this left side of the India and going this like a Mala to on the right side of India. And again, it is connecting by other way on top of that. That is given separately. This Bharatmala project is given to, I think, L&T only. So they are, see, they can't construct in a single year. That is almost like 1 lakh kilometers is there. They have to construct. So that takes maybe some 10 years, maybe some 15 years, we don't know. For that, see, generally they are doing around 22 to 24 kilometers a day construction of road. Then 1 lakh kilometers you divided by, that is how much? 5,000 days, huh? Around 10 years it goes, 10, 12 years. How many days? 5,000. Okay, at least 10 years it goes. Then if you receive any advance for AMC contracts. What is AMC contract? Annual maintenance contract. For example, sir, I'll buy one AC or laptop. For example, there is something called as extended warranty or mobile extended warranty, that is called as AMC. In that year, whatever happens, I can go to the showroom or service station, then I can get it repaired. So if you receive any advance, recently my laptop, I extended my warranty because that Samsung laptop is continuously giving touchpad issues. Samsung Galaxy Book 4. So in the 1 year only, I went and changed 2 touchpads. That is around some 9,000, I think. No, I did not pay anything. That is under the warranty. Then instead of taking that risk, I extended it for 2 years. So the 2 years money is not considered as deposits. Then sectoral permitted advances. What is sectoral permitted advances? Like agriculture sector, some advance, that category thing. That is also not deposits. Or advance for subscription. What is advance for subscription? In ICA also we have it. Whenever you are getting registered, they'll tell that 400 rupees for monthly subscription books and all those things. Journals. The journals has to be selected. If you pay any money in advance, see, you pay, consider 400 rupees for the next 12 months. That means they have an advance amount for the next 11 months. 1 month they might have sent it now. See, they'll show that as entirely liability. 1 month journal they sent, adjusted that 1 month money. Again, second month journal sent, again second month money is being adjusted as revenue of the ICA. That is how it is being treated. That is also not this thing. Then last two are, if you receive any loan from a promoter or their relatives as unsecured loans due to stipulations. Stipulations means what? Conditions of lending institutions, exempt until financial institutions loans are repaid. Then if you receive any money from Nidhi, not your girlfriend, Nidhi company, chit fund company, collective investment scheme, startups, what is startup they told again, RIT, INVIT, etc., are not considered deposits. This is what is deposit: any form of loan, deposit, or other forms, but excludes all these things: Indian government and authorities under Indian government, parliament authority, foreign government and foreign institutions, then directors and their relatives in case of private company, and only directors in case of public company. Then any money received from banking institutions, financial institutions, that is also not considered. Again, any money which is received for share application money but pending allotment, 60 days over, you did not repay it, 15 you did not allot it, next 15 days you did not repay it, then 76th day it is a deposit. Then again, any money received from Nidhi, chit fund, collective investment schemes, etc., is also not considered as deposits. Other things are deposits. Now comes regular part discussion. What is, who is the depositor? The person who gives the money is the depositor. Depositor refers to any member of a company who has made deposit. The moment I tell this is any member of the company, is it applicable for private company or public company or both? Both. And any person who has made deposit with the public company, they only told, see, when I say any person, he is other than member, because member is already covered. Other than member is there, but only for which company? Public company. And a depositor may be a member or a non-member of a company also. Depends on what type of company you are, private or public. And depositor is anyone who has deposited money with the company, whether or not they are a member. Who is depositor? The person who gives the money is called as depositor. That's it. Then, whenever you want to accept the deposit, there are some prohibitive provisions. What is prohibitive provisions? You can't accept deposits with respect to these things. So no company can accept the deposits or renew the deposits from the public. Look at the language, from the public. That means I'm not talking about the members part. Unless it follows the procedures provided under chapter 5, this chapter of Companies Act 2013. What this chapter says is, whenever company want to accept the deposits or something, or renew the deposit, they accepted for 3 years, now they want to renew it. Now you can't renew it impliedly. You should get a written express consent from the member stating that yes, your deposits has matured and you are trying to renew the deposits. If you don't have that written express consent from those members, you can't renew or you can't accept any deposits. And the prohibition does not apply to these financial institutions, I call it as, because anyway their main business is only that accepting the deposits and lending the loans. That is why they are excluded. Whenever you want to accept the deposits from the members, what is the provisions? So a company shall pass an OR in general meeting to accept the deposits from its members. Why they should pass a OR? Tell me, why can't they directly borrow from the outsider? Because they should pay interest. When I say that they're paying interest, they're paying part of the shareholders' profit. Because of which, see, when the shareholders are believing in you, why you pay money to outsiders? Pay money to the insiders only, like your family members. That is why first ask them. Then again, after you pass a OR, you should give a circular with the statement stating that a company must issue a circular to its members, including financial position of the company, what is the profit, what is the loss, what is the sales, every financial position has to be given. Credit rating obtained, because every company, whenever they want to accept the deposit, definitely how much deposit they have to accept is dependent on this thing, a credit rating. Even in our case also, in individuality, there is something called a CIBIL score. So CIBIL score and my monthly income and assets will decide how much loan I can get. If I keep it income part aside, CIBIL score will decide. A CIBIL score of 800 plus is very, very good. Again, a CIBIL score of less than 650 is again not considered as good. Less than 500 is so nobody considered. That means high 850, 800, 850 plus highest reputed person in case of repayment of money. That's how it is there. So for us it is numbers 100, 101 to 900 it is there. But for them it is like A plus or A plus, AA plus, double plus category of rating will be there. So the category which you fall will decide how much deposits you can accept it. So the total number of depositors and amount due on the previous deposits, see, not this, earlier what is there, and other prescribed details also has to be given in that circular. Sir, how do you give the circulation of that circular? You can send to all the members via registered post or speed post or any email, electronic mail. But when you send a registered post, it has to be acknowledgement due. We call it as RPAD. Registered post acknowledgement due. You know what is the registered post acknowledgement due? That whenever you send a post, you will attach a postcard kind of thing. Once they deliver that thing, they'll get it signed by the opposite party and give that back. Yes, sir, it is delivered. Take a confirmation. Acknowledgement is due to be brought back to me. Or you can publish in a English newspaper and vernacular newspaper. This is how you are going to circulate. This is important. What are the contents of circular which are to be issued with respect to acceptance of deposit? Again, you should get a certificate from the auditor also. With respect to what? With respect to company did not commit any default in deposit repayment or interest repayment in earlier years. If it is first time deposit acceptance, then there is no problem. No need to get the certificate also. If the company has defaulted, the certificate must state that default was rectified already and 5 years have been completed from the date of rectification. Then the circular must be authorized and issued in the name of board of directors. It is remain valid until the earliest of the following. Sir, what is that following? Either 6 months from the financial year close, that is 30th September, or the date on the financial statements are presented at the AGM, that is also 30th September. So then why did they give the 30th September? Because sometimes AGM might be conducted before only, August, July, that is why. Anything which comes first will be the deadline of that circular. So a new circular must be issued each financial year for inviting the deposit, because the validity will get over by AGM. The moment once it is done, the company must file a copy of the circular with ROC within 30 days before the issuance. You want to issue on some 30th of April, then before 30 days you file with ROC, then you get approval, then you can go ahead. See here also 30 days. Any communication to ROC is 30 days generally. And they should create a DRR account. So what is DRR account? In debentures also it was there. They should create the debenture account, and again debenture redemption reserve. How much money they should keep it aside? Invest in a scheduled bank. Or okay, how much money? What is this? There are two conditions. What are those two conditions? One, investment condition is there. That means whatever the money which is maturing in the current year, at least 15% of that money has to be invested in the secured bank or scheduled bank by 30th April of the current financial year. If you are repayment is there, consider today is 1st April, 27 March 31st is end of our financial year now. So consider some 10 lakh rupees is going to be matured in this entire period. Now 10 lakh into 15%, at least 1.5 lakh rupees has to be deposited in a scheduled bank by 30th April. That is what it is there in debentures. Now here, company must deposit at least 20% of maturing deposits for the next year in a separate bank account by 30th April of each year. Same to same, but the percentage changing here. There 15%, here it is 20%. And funds from what the debenture deposit redemption reserve account should be used only for deposit repayment only. You can't use it for any other purpose. It is like specific fund. You can't, it is not a general reserve. And you should even get, company must also certify that it has not defaulted in repayment of deposits, repayment of interest on such deposits. If the default has occurred, that was rectified and 5 years has been completed. That auditor certificate only, they just repeated it here. And if they want to create any security on the deposits, yes, security deposits also possible in case of a company, but they should create a charge on assets. Which charge? Charge on tangible assets. Intangible assets charge is not going to happen. And unsecured deposits must clearly state in the circular. Then what is the tenure of deposits? It is also an important part. This certificate is also important, MCQ part mainly. Minimum tenure is 6 months, maximum is 36 months. But there is an exception. If you want to accept any deposit which is less than 10% of paid up capital, free reserves and security premium, then you can accept with a minimum period of 3 months. You can't accept for 1 month, 2 months, 2.9. you should accept compulsorily for at least 3 months. Then the accepted amount should not be equal to or more than 10% of the paid up share capital, free reserves and security premium. This is very important. You may ask MCQ also or descriptive also. Here it is also important. How much money you can accept from the members? I'm talking from the member. Can a public company accept the deposits from the members? Private company? Yes. Yes, why? Private company can accept only from members, not from the public. I'm talking from members. Members means shareholders. Totally they can accept is 35% of the paid up share capital, free reserves and security premium can be accepted from the members. If you're a private company or IFSC company, they can accept up to 100% of those paid up share capital, free reserves and security premium only for IFSC or those things. But exceptions to that 100% limit is a private company has to be a startup company. What is startup company? 10 years is not completed from the what is this incorporation, and a private company that is not associated or subsidiary of any other company. Generally, they are talking about public company. Or okay, we'll write it as only company, and its borrowings from banks, FIs or corporate bodies are less than 2 times of paid up share capital or 50 crore rupees, whichever is less. Two conditions are there when you can accept 100% of the paid up share capital, free reserves and security premium as the deposits from the members is you are not an subsidiary or associate of other company, and outstanding borrowings is 2 times of paid up share capital or 50 crore rupees, whichever is lower. Third point is not defaulted in repayment of such borrowings at the time of accepting the deposits. No default. First point, second point and third point. If these 3 points are satisfied, then they can accept 100% of paid up share capital, free reserves and security premium from the members, not from the public. So again, depositors trustee, debenture trustee was there. The similar way deposit trustee is there. What it does is generally try to act as a bridge between those people. One thing you should remember for examination is MCQ point. The trustee can call the meeting if the meeting is requested by at least one tenth of the depositors in value, or if the default occurs. If the default occurs, no need to make an application. If somebody voluntarily want to have the meeting, then at least you should have the 10% of the entire deposits which is outstanding. Then you can call for the meeting as a member. Then repayment of deposits is whenever the time comes, they have to repay it. If they don't repay it, then people will go to NCLT court and all those things. This relaxation we just now discussed, we wrote it right. The 2 times of the paid up share capital, 50 crore rupees, whichever is less, no default, and the first one is 100% of paid up share capital, free reserves, and it should be a startup company. No, make it as 10. Startup is 10 years. Hmm? Hmm? It is not a startup company only then. No. Your startup company up to 10 years, provided your turnover is less than 100 CR. If your turnover exceeds more than 100 CR in the first year only, then you are not a startup. Startup means you are struggling. If you are struggling means where you get 100 crores. That is what their intention is. If you are already doing 100 here, then definitely you are not a startup. You are already established one. That is what they thinking. And every details has to be filed with ROC. The DPT3 from not required. And whenever you accept the deposit, definitely should give the interest. How much interest? Interest rate should not exceed any rate which is set by RBI for NBFCs. See, RBI set a interest rate for banks. I am not considering that. RBI set interest rate for NBFCs. As a company, you should not pay more interest than the interest amount rate fixed for NBFCs. Then every depositor should submit an application that it is not from a borrowed money, it is from the own money only, and deposit maximum jointly 3%. And they should can nominate the person in case of their death who will take care of it. And a receipt must be provided within 21 days of deposit or renewal, and it should include date, name, time, interest rate, and maturity date. Consider I gave a deposit within 21 days, give the receipt. This can also an MCQ point. Premature deposit is also allowed. DPT3 has to be filed by 30th June each year to report the deposit accepted. And if the company want to change any terms of deposits, they can never change if they are detrimental to the depositor's interest. Detrimental means what? Against the interest of deposit holder. All those things are okay. Penalty is also okay. When I tell public company, whatever we discussed till now, that is from the accepting of the deposits from the members. What we discussing now, eligible public company which can accept deposits from public. Kanji small company or public company also can't be accepting that money. When if you are a public company with two conditions, either your net worth is more than or equal to 100 CR or turnover is more than or equal to 500 CR. Any of the condition is being satisfied, then only you are eligible to accept the money from public. So, but before accepting that, company must obtain a prior consent through special resolution passed in the general meeting. Look at the thing. Whenever accepting the deposits from the members, earlier we told that is only OR, ordinary resolution. But here, public, you should go for special resolution. How much you can accept? An eligible company, eligible means that 100 or 500, accepting deposits within the limits under 181C may accept deposits by means of ordinary resolution. That means 181C have some limits. If you are going within that limit, OR is sufficient. Beyond that limit, SR is required. And that resolution has to be filed with ROC. Then every company also has to get a credit rating, obtain a rating, including the net worth, liquidity, ability to pay deposits and due dates, and from a recognized credit rating agency. If you want to accept the secured deposits, then you should create the charge on assets within 30 days of acceptance of deposits. On which assets? Tangible assets. On what amount? The total security of the asset should not be less than the deposit amount and interest amount payable. If you accepted 100 crore rupees and consider you are having a maturity period of 2 years with a 10% interest, 100 plus 10% is 110 plus 10% is 120. So the value of the asset should not be less than 120 crores at least security. And company cannot do it on intangible assets, not possible. Sir, how do you decide asset value is 120 crores? It is done by registered valuation, they'll do it. Tangible can be movable as well as immovable property also. Anything is okay. So much of repetition is happening, right? Tenure of deposit, be repayable on demand. See, deposits cannot be repayable on demand. It has to be compulsorily time bound. If you remember the first point we discussed in the basic part. But having less than 6 months tenure, minimum 6 months tenure, maximum 6 months tenure. But less than 6 months is also okay, provided short-term funds less than or equal to 10% of all those things, 10% ceiling limit. But that is at least 3 months has to be there. Again, company should appoint the trustee. That is same thing. Okay, you can't be a trustee provided you are connected to the company, KMP, director, or you are already supposed to give some money to the company. When there is any relationship with the company with you, then you can't be a trustee. Can a director or anybody remove the trustee? Yes, they can remove, provided trustee can't be removed after issuing a circular advertisement and before their term ends, unless all directors present at the board meeting approve the removal. That means 100% approval. See, I am not telling all the directors has to come and vote. The people who has come for the meeting should vote as that removal of the directors. Out of 10 directors, 5 has come. Yes, 5 should vote as remove the trustee. And if the company has independent director, at least one independent director must be present at the meeting. Sir, when can they call the meeting? When there is any default, debenture trustee can directly call the meeting. If not, at least 1/10 of the depositors by value can request it for the calling the meeting. Similar provisions only. Then, how much deposits you can accept? If you are a non-government company, you can accept from the members maximum 10% of PUC, SR, SP and FR. And from the others, that means public, 25%, maximum 25 percentage. And government company can accept deposits of not more than 35% of paid up share capital, free reserves and security premium. Then the circular is also similar. Remaining things are similar only, nothing changed. So 20% of maturing deposits in the next year that has to be paid within 30th of April. They should give a declaration stating that it is not from borrowed funds, maximum 3% joint holders. So isn't it repetition? Whatever we discussed, that is from acceptance of members. Now it is public. 21 days. 35% of maximum deposits they can accept is 35% of all those things together. Any company. But in case of public company, what happens is we can divide that public company into government company and non-government company. When I say non-government company, Reliance is a non-government company. IOCL, Indian Oil Corporation, is a government company where more than 51% or equal to 51% is held by government. Now, out of that public company, when I tell public, they can accept from members also and public also. How much can they accept from the public? They're telling maximum 25% is from public if it is non-government, and at least 10%, maximum 10% from members. But if you are a government company, you can accept 35% from public itself. That is what they're trying to tell. That condition. No. For the purpose of acceptance of money from public, you have to be a public company. Private company can accept only from members of the company. We already discussed that. So now, public company can also be, again, government public company and non-government public company. What is public company? In which more than 7 members are there. So if the company is considered State Bank of India, Life Insurance Corporation, more than 7 members are there, but more than 51% of stake is held by government. But Reliance company, Adani, Infosys, Tata, all those things are also public company. But more than 51% is not held by government. In case of first category, SBI, all those things, LIC, then those companies can accept deposits entirely 35% from public. I don't have any problem. But if you are a non-government public company, that means Reliance, Adani, Infosys, Tata, then maximum 25% can be accepted from public and maximum 10% can be accepted from members. Public company concept, public deposits concept comes only for public company. Private company concept only not there here. Premature repayment, is it possible? That means I there was only 3 years, but I went to the company and asked to give me within 2 years only. Yes, that is possible. If requested after 6 months, 1% interest reduction will be there. Then this is same. And this is a register of deposits. That means as we maintain register of members, debenture holders, they have to maintain register of deposits. Every company accepting the deposits must maintain a separate register for deposits accepted, renewed at its registered office. Again, they should maintain the deposits from public is separate, deposits from the members is separate registers. What should contain every depositor's details? Same biodata, entirely biodata. Name, address, PAN, guardian details if in case of minor, nominee, deposit receipt number, date of acceptance, date of cessation, what is the interest rate payable, due date of repayment, 1 year, 2 year, 3 year, everything. Now one small concept is there. You can read this out. Penalty and all those things not required. You mark it as important. This is also important. Percentage. See, if you look at the heading, you will understand. Acceptance from public. How much you can accept from the public? They're talking. Non-government public company. If you want non-government public company, you can write it as. And it is government public company. Here, repayment of deposits accepted before commencement of act. It is actually, as of today, it is no relevant only. When this act has come in 2013, before that also in 1956 there were some provisions for the deposits, but the period is different. Now when it is current Companies Act 2013, then the highest maturity period is 3 years. So even though you accepted deposits for 10 years before this act, consider you accepted in 2012 only, or you accepted in 1995 also, I don't care, before the commencement of this act, then you should redeem those deposits earlier of these things. What is that thing we are discussing? For deposits accepted before 1/4/2014 and unpaid as on the date are becoming due thereafter, then file a statement of deposits with ROC within 3 months of the commencement of this act and repay the deposits within 3 years from 1/4/2014 or earlier based on the original terms. For example, on 1/4/2013, you accept the deposits for 8 years. I don't know what is 1956 Act, what is the provision, because I also studied 2013 Act only. I'm just taking a guess of 8 years. Now, when I say 8 years, it will mature on what date? 14, 15, 16, 17, 18, 19, 20, 21. So 2021, 31st March, that will be matured. They're trying to tell that this is one category, one case. I'll take one more case. I'll take one more case, that is, you accepted deposit on 1/4/1995. 95 ಅಲ್ಲ 2005 for 10 years. 10 years. Now what is the maturity date? 15. 31/3/2015 is a maturity date. Now you consider you should redeem or repay the deposits when within 3 years from 1/4/2014. You count 1/4/2014 and 3 years, 15, 16, 17. That means 31/3/17 is the maximum period. If you have any deposits before 2013 Act, you should redeem entire deposits by 2017 31st March or earlier. Why earlier? If the original terms only has the time of before 31st March 2017, you redeem it. For example, this goes up to 2021. You can't take it up to 2021. Maximum date is 31/3/17. You did not get it. Okay. When did this act has commenced? 1/4/2014 it started the act. As per this act, maximum period of deposits is 3 years. But under 1956 Companies Act, if you have accepted the deposit for more than 3 years, consider 8 years or 10 years. Consider I am taking first example is 8 years. As per that act, you should redeem it or repay it by 2021st March. You have a right till 2021. But this act is telling when it started, I don't care what are the original terms. Maximum time I give you for you is 3 years. Either you repay the deposits or redeem it, you do something, but I don't want the deposits to go more than 3 years. That means 15, 16, 17. By 31st March 17, go. You redeem it. Sir, still I have till 2021. I don't care. Either this date, 31st March 2017, or look at the second case. They accept the deposit in 2005 and the maturity is 2015. But as per this act, what is the 3 years maturity? That is 2017. But as per the original deposits accepted terms also, it is ending earlier than that, either it is this date or earlier dates has to be redeemed or repaid. That is what it says. 3 years from 1 for 14 or earlier based on the original terms. If the original terms allow you to redeem earlier, redeem it. If not, maximum I give time is that thing. Then punishment, non-repayment, you can go through that. That's it. That is deposit. Go through the entire thing. So around 50 minutes we completed it. Hmm. Go through it. I'll bring the help. You have seen the exam tips. I think some 10 points are there. We can see some questions. Around 14 questions are there here. So that is based on the charges part. Next chapter. Sorry, we should open fifth chapter, right? We are also 13 questions. So PRT limited. The moment you see the word limited, it is what company? Public company. An eligible public company. See, you should remember that eligible public company. Which is eligible public company? What? Net worth is more than or equal to 100 or 500. Then it is eligible. With a net worth of 95 crores and turnover of 250 crores. They're telling it is eligible company. But they're telling it is net worth of 95 and turnover is 250. Outstanding deposits is 40 crores. Advise PRT Limited an eligible company for accepting the deposits from the public? Definitely not. What is the maximum amount of deposits it can accept? What conditions must be fulfilled? It is first of all not an eligible company. How much deposits, maximum amount deposits they can accept if there is an eligible company? 25% from the public and 10% from the member. And conditions are what they should not defaulted in any repayment, 5 years is not completed, auditor declaration, and OR has to be passed, SR has to be passed. If it is within 181C limit, those things has to be written here. So 1 second. I'll open the audio, this thing. Answers in some other file. So eligible company means 1 second, let me see the pencil. Eligible company means company with a net worth of not less than 100 here they used in the other way because they are told not less than 100. Our turnover is not less than 500 CR. We are 95 and it is 250, so it does not qualify as eligible company. Can't accept the deposits from public. See, they can't accept from the public. It does not mean that they can't accept from the members. Members still they can accept. So as a non-eligible company, it can accept deposits from members only up to 35% of the paid up capital, free reserves and security premium. Sir, you told 10%. Actually, the limit is for public acceptance of deposits. If you're a public company and eligible company, see, any company can accept up to 35% of paid up share capital, free reserves and security premium as deposits. But if you're an eligible public company, out of 35, 25 can be accepted from the public. If you're not eligible, then you can accept 35 from the members only. You can't go for public. From members, 35% is the eligible limit. Conditions is credit rating has to be there with a recognized agency, deposit insurance, appointment of deposit trustee, filing of DPT1, maintaining of deposit repayment reserves of 20% of deposits maturing in the next year. Similar thing. You understood that if you are a eligible public company, you can split the acceptance of deposits from public and members. Public is 25, remaining is from members. If you are not eligible company, entire deposits is from members only. Then definition of this thing. This is Jan 26 for 5 marks. Look at how simple it is. Define the term deposits. A deposit means any kind of deposits, loans, or other forms, but it does not include some government, non-government that you have tried. And examine the validity of SK Textiles Limited wants to accept the deposits of 1 crore rupees from its members for a tenure of less than 6 months. Can they accept? First of all, you should write a main provision that what is this? What is that? We call it duration of the deposit has to be minimum 6 months, not less than 6 months, and it can go up to 36 months. However, for short-term funds, it can accept 10, not more than 10% of the paid-up share capital, free reserves, and security premium for short-term from what is this? Less than 6 months, but not exceeding, not less than 3 months, 3 to 6 months. Yes, they can accept if that is within the limit. That is an exception. You should write the main provision first, then the second part. Directors of SATC Technologies Private Limited asks his friend K to lend the company 50 lakh rupees by way of convertible note payable within 6 years. What is the connection here? No connection. First of all, he is a friend. Yes, relatives are also considered. Friend is not a relative. And 6 years means it is not a deposit. It's convertible note payable within 6 years. Any receipts of money by way of deposit, loan, other form, etc., but does not include amount received from banks, governments, directors, amount raised by issue of securities, etc. SK Textiles, tenure of less than 6 months under etc. Company shall accept the deposits repayable on demand or repayable within 6 months. SK Textiles cannot accept the deposits for less than 6 months. It is not valid. Why it is not valid? Okay, that is an exception. They told it is other than exception. 1 crore compare maarte comparison is also not there. Tenure of less than 6 months under 73 2B. No company shall accept deposits. Okay, they gave the general provisions. If they would have asked the thing, see, you write the general provision, they can't accept, but however, for short-term funds less than or equal to 10% of PUC plus FR and SP, you can accept it. You can write that. And convertible note, K is not a director. A convertible note from non-exempt person payable within 6 years constitutes a deposits. The company must comply with the deposit acceptance registers. First of all, when I say this, they should comply with these things. They should bring down to less than 36 months. That means they should repay within 36 months. Then only it can be come under the deposits part. Then again, what is eligible company? If it is eligible company, 25% from members, 10%, sorry, 25% from public, 10% from members. What is eligible? Net worth is more than 100 crore, yes, it is there, and turnover is more. Our turnover is more than 500 crores. It is also there. So it is eligible company. State whether it is permitted to accept the deposits from the public. Yes, because it is eligible company, it can accept. What requirements must be fulfilled before acceptance? File pass OR in the meeting, not OR, SR in the meeting, and give a circular thing, vernacular newspaper, English newspaper, those things has to be there. It is in September 24. This liability in default, you read that. Oh, Jan 26 exam. Huh? Sunset Limited, private limited collected 80 lakhs from the public. First of all, it is totally wrong. We will have to see as deposits. They told it is private company. How the hell they can collect from the public? You should read it carefully. Without appointing the trustees, without maintaining a deposit repayment reserves, without deposit insurance, default occurred in repayment and winding up was initiated. Prosecution was launched under section 76A. Examine what is the liability under 76A and can directors claim immunity. Immunity means not exactly advantage, some relaxation or relief from the personal liability since the company is in winding up. I think we did not cover that 76A. I told you to read. Where is 76A? This only 73 to 76. Punishment for officer in default and company. Company, if it accepts our invitation public of deposits in violation of prescribed conditions, or it failed to repay the deposits along with the interest on specified time, then minimum punishment is 1 crore or 2 crores or 2 times of deposit amount, whichever is lower, and maximum it can go up to 10 cr. But for the officer, imprisonment up to 7 years, fine minimum 25 lakh up to 2 crore rupees. And if it is willful thing, then under 447 also. We have to see that what is the answer. Where a company fails to repay the deposits, both company and every officer in default shall be punishable. Company, fine not less than 1 cr, twice of the amount of deposits, whichever is lower. Officer in default, imprisonment up to 7 years, or fine up to 25 lakh, or both. That means our condition is there, he can pay penalty and he can escape that imprisonment also. No immunity. Directors cannot claim any immunity from personal liability because they have to compulsorily go for jail or pay some penalty merely because of company is in winding up. 76A creates personal liability on every officer in default irrespective of winding up. You remember that also is important. Mark it as important. This punishment, 5 marks. Then eligible company, similar thing is there. I'm not discussing again. Eligible company, directors loan with the declaration. Okay, what declaration they have to give? They have to give a declaration that it is not from the borrowed funds, own funds. Then unsecured by promoters, that is also okay. Non-interest bearing security deposits by employee. Okay, can they accept non-interest bearing security deposits by employees? Is it a deposit first of all? Security deposit is not a deposit. When it is non-security, non-interest bearing, up to 1 year time is there. If it is exceeding 1 year, then it is a security deposit. If not, it is a security deposit. Again, similar thing, MTP6. Eligible company, minimum tenure 6 months to 36 months. The similar things. DRR account, you should create DRR account and transfer 20% of the deposits which are maturing in the next 31st of March. Eligible company, okay. That's it. You can go through the remaining questions. I'm just going through the glance. ಆಗಿದೆ, ನಾನು ನಿನ್ನೆ ಮಾತಾಡಿದೆ. ನೀವು ನಿಮ್ಮಲ್ಲಿ ಅಪ್ಲೋಡ್ ಮಾಡಿದ್ರೆ ಗೊತ್ತಿಲ್ಲ, ಇಲ್ಲಿ ಅಷ್ಟೇ ಮಾಡಿದಾರನ್ನ. ನಿನ್ನೆ ಹೇಳಿದ್ದೀನಿ, ಮಾಡಿರ್ಬೇಕಾಗಿತ್ತು. ಚೆಕ್ ಮಾಡ್ತೀನಿ ಇನ್ನೊಂದ್ಸರಿ. ಇಲ್ಲಾಂದ್ರೆ ಇವತ್ತು ಮಾಡಿಸ್ತೇನೆ, ನಾನೇ ಕುಂತು ಮಾಡಿಸ್ತೇನೆ. Then comes a small chapter, registration of charges. What is the registration of charges? See, first of all, you should understand what is charges. Let me give an introduction, brief introduction of the chapter. So whenever company raises any money from any party, maybe bank, maybe financial institutions, maybe third party, maybe deposits, maybe debentures, I don't care, any money that is being raised by way of loan or otherwise, then the company has an option to raise the money by way of a secured part or unsecured part. What is unsecured part? That means whenever company has the money, they will repay it. If they don't have the money or asset, then there is no repayment will happen. But in case of secured part, for the purpose of borrowing the money, definitely they should have some assets that has to be kept as a security for that loan. It is like a secured loan. Now, consider A Limited is borrowed some 10 crore rupees, keeping this building as security. Now, this borrowing and keeping the security we are not going to discuss. We are going to discuss once you borrow the money and create a security, that security creation has to be registered with ROC. That registration part is I am concerned now. I am not telling you should borrow the money on security basis. It is up to you as a business. You do whatever you want. But the moment you do it, tell me that you did it. This chapter covers registration of charges. Once you pay the money also, maybe partial payment or full payment, again you tell that I completely paid it. Sir, why this chapter has come? Mainly because consider you created a charge, you did not file with ROC. Consider you took a 10 crore rupees loan on this building from State Bank of India, secured loan. Later you went to the Canara Bank as a company, sir, I want 5 crore rupees loan, same building. Again you borrowed 5 crore rupees. Consider you did not pay SBI also, Canara also. Then which party should come and take this building? Again there is a conflict. To avoid that, multiple loans should not be created on a single asset. They started introducing something called as registration of charges. What is registration of charge? Once you take a loan, you go and register with ROC. Once you register, when you go to a next bank or any bank, first bank or any bank, sir, I want loan on this building, then the bank will go to ROC. See, this company has come with this asset. They want to mortgage this asset and get a loan. You check your register. Is there any charge which is already created and registered with you? If there is already registered charge is there on that asset, then the bank will not give the loan, so that they can protect their money and they can avoid the conflict also. And again, the same things goes for other way also. If it is already removed or not created, then they will come forward and issue it. So that it is like an authentication factor. Approval part is there. So they can create charges on tangible assets, movable assets, immobile assets, everything they can create it. So we'll see what is there. Charge means what? Charge is an interest or lien. What is interest? Interest means not buddy. Interest means I am interested in this because I am given the loan on this. Created on the property or asset of a company or its undertakings or as a security. And it even includes mortgage. Mortgage generally done for immobile properties. Generally, other than mortgage, pledge and hypothecation is done for movable properties. Sir, what is a fixed charge? What is floating charge? There are two types of charge. When I say charge, there are two types. One is fixed charge, then second one is floating charge. Generally, fixed charge is done for immovable properties or non-current assets kind of things. Generally, this floating charge is done for current assets kind of category. Current assets, immobile like land, building. Non-current assets like machinery. Current assets like inventory, debtors, stock, all those things are there. So what is the difference between fixed charge and floating charge? So fixed charge is a category in which you have an asset, you borrow the money, the charge is created. If you don't pay the money, they'll come and seize that property, or even if you want to sell that property before repayment of loan, that is not allowed to be sold because charge is already created on that this thing. Asset. But in case of floating charge, what happens is when I say current assets is like inventory. Inventory is the main thing which is there for a company for the purpose of production of goods and selling it. Raw materials are inventory. Inventory has to be done what? They will manufacture it, process it, and make it finished goods and sell it in the market. If you, when I hypothecate my current assets and borrow the money, it is not that I can't use that current assets or floating charge. I can use those inventory continuously because once I consume this inventory, again one more type of inventory comes, again I consume it, again one more inventory comes, again consumes it, again inventory. This is a cycle. Production cycle continuously happens. Sir, what is the difference between floating charge and fixed charge? Fixed charge means you can't sell the asset without the consent of the bank or without repayment of the loan. Floating charge means you can continuously keep on selling it. But the moment you make a default, whatever the assets are there in this go down, entirely they will stop and come and seize it. That means there is a word called as crystallization of floating charges. It is there in the material. What is crystallization? We call it as floating charge can be exercised at any time because there is a fixed charge can be exercised at any time because there is a fixed charge. The asset is there on which you kept it, gave a loan. But floating charges can't be exercised. You can't seize the property or asset unless until the floating charge become the fixed charge. The process of becoming a floating into fixed is called as crystallization. Crystallization means becoming clear cut. Like consider I went to the bank and I told, sir, I have this go down, some assets are there. This is worth of some 100 crores of asset. Give me 80 crore rupees of loan. Then I borrowed and I consumed the assets that gone out for production. Again I purchased the inventory, again that used, again I purchased the inventory, again that used. It is continuously used to happen. On certain day I defaulted. In that case, the day, consider it is 10th of April 26. Whatever the assets which are there on 10th of April 2026, that will be the property of the bank then. You can't tell that, sir, I'll use it for business, I'll repay it. No, you are already defaulted. That floating charge, whatever is there, that has become fixed charge for all these assets which are there in the godown as of today. That conversion is called as crystallization of floating charges into fixed charge. One more thing they tell is floating charge cannot be exercised unless until floating charge become a crystallized fixed charge. Floating charge convert fixed agovargunu you can't go and enforce the security of the floating charges. Compulsorily, first of all, you should know on which assets you are ensuring that you are taking back as a default payment. In case of inventory, continuously cycle is there? No. On that date, the moment it default, you put it, make it as fixed charge. Allen assets cycle ella nande ante fixed ಮಾಡ್ಕೊರಿ, then you can exercise that charge. Unless until you can't exercise. Now the important part here is you took every loan, everything has happened. You should register with ROC. Sir, when should I register with ROC? They tell they have a timeline. I went to the bank on 1st April, they gave a loan on 10th April. Everything is completed, the security is already created. From the date of creation of security, you should register that creation of security with ROC. So within what period? They tell that when did you create the security? There are two categories of creation of security. Either you created the security before 2/11/18 or you created the security after 2/11/18. Sir, why? Because there was an new rules which have come in 2/11/18. 2nd November 2018. Sir, I created before 2/11/18, then there is a different time limit. Sir, I created after 2/11/18, then there is a different time limit. 30 days, 300 days, again 6 months from 2/11/18. That is for the before, and later 30, 30 and 60 category is there. 30, 60 and 60. We will see all those things. That is what it is mainly being discussed here. So, fixed charge means charge on the specific asset. Which assets you are giving the loan or which assets you have a right. You know it. Specific means there of a company. Land, building, machinery, etc. Assets are identified during the charge creation. Okay, give me loan on this building. I identified this asset. And it cannot be sold without permission of charge holder. Charge created by a mortgage or deposit of title deed. That means there are two ways of creation of charge. One is registered, in audit we discussed mortgage. One is equity mortgage. Registered mortgage and equity mortgage. What is registered mortgage? This building is there in my name, na? I'll remove my name and I'll add bank's name. It is called as registered mortgage. What is equity mortgage? I don't remove my name. The original documents I'll take it and keep it in the bank. That is called as equity mortgage. So this deposits of title deeds is category of equity mortgage. So the charge is vacated upon full repayment of money. The moment you repay the money, charge is removed, then you can use it the way you want. What is floating charge? Charge created on a fluctuating assets like raw materials, stock in trade, debtors, etc. Charge applies to both present and future assets because when I take a loan on stock, the current I am taking the loan. After 6 months, whatever the loan on assets I have taken, the assets only, not the current assets, that gone again replaced. That is why it is future assets also. Company can deal with assets in the ordinary course of business. That means you can use it the way you use it in the normal business. You can use it for production, sell it, buy it, anything you do it. Charge created via hypothecation or lien. Here, if you look at the language, they did not use the word mortgage. They use the word hypothecation. Hypothecation is generally done for current assets. Mortgage is generally done for immovable assets, non-current assets. And they becomes fixed, that crystallized, when the creditor enforces security or company goes into liquidation. Whatever the things are there, that is there. Crystallization of floating charge, that means floating charge converts into fixed charge on all assets available at the time. So crystallization occurs when it happens, whenever the terms of floating charge are violated. They told you don't sell it to Pakistan, you purposefully sold it to Pakistan, then violated, automatically it becomes crystallized. Or company stops operations. If you don't operate, then why do you need this thing, or you will not buy it, future goods also will not come, this will go. Or company goes into liquidation. Or creditor enforces security covered by floating charge. Anything happens, they can do that. This can be asked for 4 marks question. What are the what is this? Situations when crystallization occurs. Then duty of the company to register the charges. So every company creating the charge must register particulars on its property, assets or undertakings. Whether the property is there in India or is there outside India, I don't care. Whether you take the loan in India or whether you take loan outside India, I don't care. I want the charge to be created on the property. Even the charge to be created by deposit of title deed shall be registered. That means even you tell that, sir, this asset is there, but I did not register on other names. I just gave the ownership documents. Then also it is there. charge holders can register if company fails within 30 days. That means I, as a company, took the loan from SBI. I failed to register within 30 days. Then what if I go to some other bank and borrow the money on the same asset? Then it is a loss for the State Bank of India. So that is why they tell even the charge holder, that is SBI, also has a right to go and register the charges with RBI, ROC. Sir, within 30 days they did not file. Please take my note. Please register these charges. Just because SBI gives a notice to the state ROC, ROC will immediately not register that. ROC will send a notice to me. See, SBI came up with one document stating that you have taken a loan from SBI. Is it true? If you tell yes, they'll register it. If you don't reply within certain period, then also they register it. Here silence is amount to equal acceptance. Then purchasing company must register the existing charge with ROC. That means consider I had this building of 20 crore rupees. I took a loan of 10 crores. Now I am in need of so much of money. I sold this building to some other party. But there is already a charge created. So the purchasing company, the new company, should remove my name in the charge and they should register their name in the charge. They have to replace their names. How do you create CHG1? Within 30 days you have to register with. Verifications and exemptions. Outside India, you should get a certificate under company seal or common seal signed by director or company secretary, authorized officers of charge holders. If it is asset is there in India, then you get a certificate signed by director, company secretary or authorized officer of charge holder. This is there. That means you should get a certificate if regarding the asset, whether that is belonging to you or not. Then when should you register the charge? The charge registration should happen within 30 days from generally under both the cases. Generally every company should register within 30 days. But again, if you created charge before 2/11/18, you should register within 30 days. You fail to register within 30 days, then ROC will give 300 days of creation of charges within 300 days. Within 300 days means what? It is 30 plus 270. Look at the language. Within 300 days of charge creation. First 30 days already you have from charge creation. Don't register. Then 300 days. That means 30 already over, 270 is there. Still you did not create it. It failed. If failed, then the last option they have is register within 6 months from 2/11/18 with the prescribed fees, additional fees. Sir, what is this thing? We will understand once I discuss after the other part. Again, sorry, I taken a loan and I created a charge after 2/11/18. Then we create, register charge within 30 days of creation. If it is not registered within 30 days, then ROC will allow the registration within 60 days of creation of charge. That means 30 additional days. Then also you failed, then ROC will allow further 60 days. That means it is 30 plus 30 plus 60. First 30 is there here, and second 30 is there here, and this 60 is there here. Then here, what is this? Here it is 30 plus 270 plus 6 months. This is the effective part. Extension procedure, you should make an application to ROC. I am not discussing that. Then once you register the charge, they give something called as certificate of registration. Certificate of registration. The certificate of registration is conclusive evidence that you complied all the requirements of this chapter 6. So what is the 6 months criteria? For example, I'll take 2 examples here. Consider I have taken loan on, I'll take 2 examples for the before and 1 example for the, I don't think example required for the post 2/11/18. That is the simplest language. Here, I took created some charge on, it's 1 year, 18, 1116. 1116. If it is 1116, when should I register? Is it before 2/11/18? That means within 30 days. I am not counting excluding that date, including that date. I am just taking on an assumption basis. You should count the actual number of days. 31/16 is the 30 days period. Actually, one should not include, 30 should not include, but I am taking it. If you fail within that days, the 30 days, then Next 270 days or 300 days within creation of charges. When I say 300 days, you exclude 65 days from 1/1/17. That means December 31 days you exclude. Again November 30 days you exclude. How much it happened? 61 plus 4 days of October. October 31, 30, 29 and 28. That means 27 is a period. 27, 10, 16 is a timeline. If you don't register within that timeline also, then ultimate option we have is, because that is 6 months from 2/11/18. What is 6 months from 2/11/18? 12, 1, 2, 3, 4, 5. That means 2, 5, 19 is the deadline. 6 months from. Earlier are days, this is months. You should take it on a month basis. Month 1, 2, 3, 4, 5, irrespective of number of days. Sir, why this is there? Because earlier concept is different. When the new law came, we gave a last option. If you remember, in 2016, when the demonetization happened, November 8, 2016, before that there was some scheme that is introduced by Ministry of Finance and Ministry of Finance only, and Corporate Affairs also they introduced because of corporates. What is that? We call it as ICDS. ICD standard, something they introduced. That is income disclosure standards or scheme they give. IDS, income disclosure scheme. They told is what? If we have any black money, if you have any undisclosed money, if you have any unaccounted money in a cash or anything, we are giving a last option. Pay actual tax 30% or whatever it is supposed to be paid and make it as white. Not 72%. That is, if the department comes and finds you that raid by way of raid, that is called as undisclosed. That is 68, 69 part. Here they told normal 30% tax and surcharge, if applicable surcharge, pay health and education cess and make it white. Few people made it, around some 20,000 crores that has become white at that time. It has come in the month of Jan, Feb, March, that category, some 6 months earlier, 6 months time they gave. The people who did not convert that entire cash into all those things, in November 8, 2016, buy our behno, gone everything. So it is like last option they gave. Even though you earned it on maybe 1990 also, I don't care. Last 6 months you have convert it. Here also, even though you register, you created charge in 1990, but you failed to register, now I'm giving the last option to register. Because rules is come on 2/11/18, that is the rule date, new rule date. Sir, is it useful? Yes. Your deadline is already ended on 2016. Still you are getting time here at the last time. But that is not useful in case of this thing. If you created charge on 1/10/2018, 1/10/2018, is it before 2/11/18? Yes, it is before 2/11/18. A month only you should see. Then 30 days. 30 days means the 30/10/18 is there. After that 300 days. Then when I take this 10th month, plus 10, got it. 10th month means 9, 8. Exclude August and September. Some 4 days in July also. I'll take 26th of July. July is 7 and 19. 19. Then if you don't register by this date also, then you are having last 6 months from 2/11/18. 2/11/18. Is it 300 days earlier? Okay, 300 days only. 2/11/18. What is 2/11/18 6 months? It is 2/5/19. That means you have extra time by this provision only. You don't need to come for this. This 6 months has given for old charge creator. Very, very old people. Old people means earlier, before 2017, 8, 16, 15, those people. They have a last option. After that, the same thing. Before 2/11/18, within 30 days, failed within 30 days. See, for everything there is a fees. I'm ignoring the fees part. Register within 30 days by paying the fees. Failed, register within 300 days of creation of charge by paying some additional fees. Failed, again, register within 6 months from the end of 2/11/18. That is with additional fees. If it is after 2/11/18, within 30 days of registration, creation, register the charge with fees. If it is not within 60 days from the date of creation of charge, use the word 60 days only. Don't use the word further 30 days. You use the word as within 60 days from creation of charge. That is 30 plus 30 that comes automatically with additional fees. If not, within further 60 days by paying ad valorem fees. The procedure they gave it by filing that thing. So any charge registered with the extended period will not affect the rights acquired over the property before the charge was actually registered. That means if they created on 1990 but they did not register, if they register in 2018, then whatever the rights earlier there, now the same rights of the bank will still continue to be there. Just because it is not registered, it is not going to take back. Then registration is a legal formality, despite everything is there. Unregistered charges are not considered by the liquidator or creditors. That means whenever the company goes for liquidation, you give the loan as secured loan. But if you don't register with ROC, then they don't treat you as secured creditors. They'll ask you to go and stand in the unsecured line. Unsecured line means they'll come in a proportionate. You don't get entire money for this thing. Non-registration shall not negate the contract or repayment of obligation. That just because you did not register as a company, it does not mean that you don't need to repay it. Negate means exclude. Exclude. Then charge holder loses a priority of other creditors with earlier registration. That means I took a loan from SBI. I did not register. Again, I took the same building loan on Canara. But Canara Bank went and registered first. Even though I took the secured loan on SBI first, they don't care who registered first will get the right over that building. Priority is given for who registers first. Who did give the loan, I don't care. Then if the company failed to register the charge, then charge holder can create the charge. If the company fails to register within 30 days, the charge holder may apply for ROC for registration along with the instrument of charge in the prescribed time, form and manner. Then upon receiving the application from company, ROC will issue a notice to the company. See, some SBI has come stating that you have taken a loan from SBI. Is it right or wrong? They'll give a notice to the company. If no objection raised by the company, then ROC will allow the registration within 14 days of notice. I gave a notice on 1st April. Within 14 days, they did not reply anything by the company. Then, okay, 14th day, we will register in SBI name only. Subjected to payment of prescribed fee, SBI has to pay it. Then, if ROC will not permit registration by charge holder, if the company registers the charge itself, if the company only goes and tells that I took a loan, please register, then SBI, when the SBI comes, they'll send it back. You go home, already done it is by the company. Or provides a sufficient reason that should not be registered. Sir, we taken a loan, but that is under the court dispute. Court told that you should not register any charges with the ROC. That is why I am not registering. If you give any sufficient reason for non-registration, then the ROC will also not register. Then, if the registration is made by charge holder's application, then charge holder is entitled to recover the company, the fees, additional fees, etc. to ROC. Because the duty is to register the charges is the company. If the company fails, I am doing your duty. But I am not supposed to pay your fees also. Now I will pay, I will reimburse it at later point of time. We'll take. So next one is if you are a company who is acquiring a property which is already subjected to charge. That means I am purchasing something which is already charge is created on which. So acquisition with the existing charge means the property with an existing registered charge is sold with the charge holder's consent. That means who is holding, for example, I am having a asset, I have taken a loan from SBI. I'll take a consent from SBI bank and I'll sell it. And the acquiring company shall ensure that charge is registered as per section 77. That means they tell you to the ROC, sir, I purchased, please change that registered thing. Then in case of registration of new charge, the earlier charge should be vacated. Vacated means what? Removed. And a new charge shall be created by the acquiring company. Then comes modification of charge. Nothing so great. Modification means what? Consider I have taken 10 crore rupees of loan and I have kept my building on security basis. In between, I repaid 5 crore rupees. Then I have to modify this thing, or I want this building to be taken out of charge. I want something has to be kept as security. So when there is modification of with respect to anything, that can be discussed here. So any modification of change registered by the company in accordance with 77 only. What is modification? Modification means either you vary the in terms of conditions of agreement, including the rate of interest or period or anything, you change it. Then charge is changed. Variation in the extent or operation of any charge. And assignment of the charge holder's right to third party is also considered as modification. You do anything, it is modification. This is important from examination angle. Then once the modification is registered, ROC will issue something called as certificate of modification in CHG3 form. Form number is not important. Stating that yes, earlier thing was something, it is modified and this is a new modified certificate. And the certificate, whatever it is issued by ROC, that is a conclusive evidence that everything has been complied with respect to this chapter. Then comes a deemed notice of charge. What is deemed notice of charge? When a charge is registered under 77, a person acquiring those assets or shares is deemed to have a notice of charge from the date of registration. That means consider I have a property which is already there with the SBI. Consider Shashi wanted to buy that property. Now the party who is buying that property is already know that there is already a charge created on that asset. He has that notice. He can't tell that I didn't know that. I will go to the court. No, I don't care. That is what they are trying to tell. Any charges which are registered with ROC are public documents. Similar to MOA and AOA, you can go and inspect with ROC. Filing with ROC serves as a constructive notice. So deemed knowledge, even if third party does not refer to the document. Even if you don't read it, we treat it as you read it and you know you have the knowledge of all the things. Anyone who want to lend the money or buy the property from the company, they better go for mci.gov.in, and if there is any charge on that asset or not, they can go and verify by paying some nominal fees. If a person transacts without inquiry and suffers loss, then we don't, court will not entertain that. Yes, you should have done that inquiry, you did not do it, it is up to you, you suffer the loss now. So why this registration important? Because that prevents company from keeping the same asset as security for multiple lenders fraudulently. Reporting of satisfaction of charges. Satisfaction means what? What it is? Repayment. Full repayment of debt. I took a loan, I kept my asset as security, I repaid the loan, I am releasing that as security. That is what satisfaction of charge. So company shall give intimation of satisfaction to ROC within 30 days from the date of payment of or satisfaction. If it is IFSC or public or private company, that is for 300 days. Generally that IFSC related part is not tested in the examination, but it is there in the law we are discussing. And register may allow intimation within 300 days and application of company or charge holder with an additional fees. If you fail to do it in 30 days, you make an application to ROC that they will allow you 300 days. Then ROC will send a notice to the charge holder. That means the moment I tell the ROC, sir, I repaid the loan, please remove that charge. Registration. Then ROC will tell to the bank, SBI bank. See, SBI, this customer is telling that they already repaid the money. Is it really true? Should I remove that registration of charge? If the SBI tells us that's okay, if not, then it is automatically within how many days? Similar thing is 14 days here also. So asking them to show cause within 14 days. If you have to show cause, why it should not be removed? If no cause is shown, then satisfaction will be informed to the company. If no notice is required, then signed by the charge holder only. If cause is shown, ROC records the note in the register and informs the company. See, I wanted to remove, but the bank told you are still there is some amount pending. The bank is telling don't remove the charge, sir. Then you deal with the bank and come back to me. Once you create a charge, ROC will issue charge creator certificate. Once you satisfy the charge also, they will issue certification of shall issue a certificate of registration of satisfaction of charge. Create iದ್ದಾಗ created charge ಕೊಡ್ತಾರೆ, ಇಲ್ಲಾಂದ್ರೆ satisfaction of charge ಕೊಡ್ತಾರೆ. Then it is not registrar, it is register. Register means it is a book kind of thing, document. Where consider company has some 100 assets. Yes, 100 assets are there. It is this is the value, this is the charge created, it is with this bank. You have to maintain the register. The ROC will also has to maintain that register of charges. So ROC shall maintain a register of charges for every company in the prescribed form and manner. Where can I get it? It is in the official portal called as mca.gov.in. It is deemed to be the official register of charges. If you want to inspect that, yes, it is always open for inspection. Pay some prescribed fee 10 rupees. Then you can go and inspect it. Along with every company also shall maintain the register. See, ROC when it is maintaining, for Reliance company one separate register is maintained. For Infosys separate register. For Tata Motors one separate. Tata Steel one separate. Again Wipro separate. They will maintain separate register for every company. Company will maintain separate register for every class of assets. Land one separate register, building one separate register, multiple class of assets. So at its registered officer will have to maintain, and it shall include what? All the charges and floating charges, fixed and floating charges affecting company property, assets or undertakings. A copy of the instrument creating a charge must also be kept at the registered office. Sir, what is the proof that you created a charge to SBI Bank? Sir, take this. Because we already registered the name of SBI in the thing. You verify this. You have to keep that also. After that, what should be there in the record? The company shall record few things. All charges registered with ROC and the P, property, assets and undertakings. Undertakings means what? For example, as a holding company, I have taken loan on one subsidiary company shares only. That means my undertaking I kept it as security. Yes, that is possible. In Caro also we discussed, remember, in I think clause 9, not 9, I think clause 3. If you have taken any loan by keeping the subsidiary company's securities as a security, then you should register that. Undertaking means then details of any property acquired subjected to a charge. That means if you are a buyer of any asset which is already charge created, then you have to again change that thing, or any modification or satisfaction of charge, that also has to be maintained in the record. The moment charge is created, the moment charge is modified, the moment charge is satisfied, you should make every entry immediately after doing all those things in the register. And once you do the entry in the register, that should be authenticated, signed by director or company secretary, or any person who is authorized by the board of directors, similar things. And if the members of the company want to inspect that instrument, then it will be open for inspection during the business hours. What is business hours? 9 a.m. to 6 p.m. And for members it is or creditors it is free of charge. Other persons prescribed fee, but not exceeding 10 rupees. 10 rupees. Not more than 10 rupees. Oh, no, inspection, that's all. If you want to take the Xerox for fees, 10% extracts. Then, sir, how many years I should preserve permanently? Other instruments, 8 years from the date of satisfaction of charge, not the creation. Satisfaction of the charge, you should maintain 8 years. This is simple thing. What they are trying to tell is power of ROC to make entries in the of the satisfaction. See, when does the satisfaction will be known to the ROC? Either company which is repaid the loan tells the ROC that sir everything has been satisfied, or bank will come and tell that. If nobody is telling, then if it is known to the ROC by third party, ROC has a power to make entry automatically. They don't need to ask anything. So it is the power of ROC to make entries of satisfaction. So ROC is empowered to make entries about satisfaction or release of charge even without intimation from the company also. When property subjected to charge is sold to a third party, stating that consider I sold that thing to Suraj and tell that see there is nothing in this property, you take it, no charge is created. Then he goes to the ROC for the purpose of anything inquiring. Then ROC come to know that yes, it is removed. Then automatically they'll remove it. Neither the company nor the charge holder intimate satisfaction of earlier charge. Based on the evidence, ROC can enter memorandum of satisfaction including that debt has been satisfied either wholly or partly depending on the actuality. Part of the property or undertaking has been released from the charge, and property has been ceased to form part of the company's asset. That means you sold the asset, it is not part of you, everything is gone. And the ROC shall intimate the affected parties. Affected parties means who? One is company and charge holder. Charge holder within 30 days of making entry in the register of charges. After that, they will issue certificate of satisfaction of charges, same thing. This you read it, it is anyway we already discussed in many places. The last one is intimation of appointment of a receiver or manager. Intimation of appointment of receiver or manager. So when this happens, who is receiver? You know, if a person obtains a court order for appointment of a receiver or manager for property subjected to charge, or appoint such receiver or manager under a power granted in any instrument. Sir, who is receiver? Have you heard about this word? Whenever a company goes into liquidation, liquidator is there, assigner is there, receiver, that party. The court told, okay, company goes into liquidation, you take care of all the assets, now sell it, then settle the liability. Now he got some assets on which charge is already created by SBI. In that case, what they have to do? They shall give a notice to the company and ROC within 30 days of the order of appointment. See, from today, if whatever the company tells, don't listen because I am appointed as a receiver of the asset. And the notice shall include a copy of order or instrument of the court also. On payment of prescribed fee, ROC shall register the particulars of receiver, person or instrument of the register charges. Upon cessation of appointment, that means cessation means stop. Person appointed shall give a notice to company ROC using CHG 6 that registrar shall register the cessation of notice, something that they are trying to tell. Then punishment for contravention, they may ask this also. If the company defaulted, penalty of 5 lakh rupees. If the officer in defaulted, penalty of 50,000. If there is any fraud, then it is 447 punishment. That's it. If any person willfully does anything, then 447 they are liable. This is about charges. You can please go to exam tips. Online understood? Hmm. In your Maleshwaram group, that message has come na. Class is uploaded in the YouTube. Hmm? Hmm. This marathon. Once you're done, you can see the question. I'm not reading that. You read and understand the answer. Look at sixth question also. RTP May 26. Your examination. This question can come. Hmm? Hmm. No, they have an obligation to register a new charge. Compulsory has to be done. That's okay. That's sufficient. Continue. The time is 11:11 now. Our target is to complete it by 12 o'clock. Dividend chapter. 49 minutes. So dividend, declaration and payment of dividend. This chapter mainly discusses from 123 to 127 section number from Companies Act 2013. Sir, what is dividend? Dividend is nothing but it is a distributable profits of the company which are distributed are called as dividend, which are not distributed are called as retained earnings by the company. So anything which is available for the distribution to the shareholders is called as dividend. Now, whether the company should give the dividend or not, it is up to the company. But the moment it is decided to give the dividend, not declare and pay the dividend, then they have to follow these sections. The company does not have the profit, they don't want to give the dividend. That's okay. Have the profits, don't want to, that is up to them, business part. The moment you decide you want to do that, yes, you have to follow these things. Sir, what are those things? Whenever a company declares a dividend, when I say company declares, first there are two concepts here. Dividend means anything which even includes interim dividend. When I use the word dividend, I am talking about final dividend or annual dividend. Any dividend which is, if you remember management and administration chapter, at the points at AGM, under which one point is the declaration of dividend. So any dividend which is declared on the AGM by the shareholders is called as normal dividend, that is annual or final dividend. But any dividend which is declared between two AGMs, or between two final dividends, that is called as interim dividend. Consider after the first quarter they felt they have so much of profit, so they don't want to declare the dividend, as they can do it. Second quarter they want to do it, they can do it. It is up to them. But for the interim dividend, the approval of the shareholders are not required. Only for the final dividend, the shareholders of the approval of the shareholders are required. Whenever company decided to declare the final dividend, I am talking, not about the interim dividend. First, it has to propose. It means board of directors has to propose the percentage of dividend that has to be declared by the shareholders in the general meeting. Once the board proposes to declare a dividend, the members has the option either to accept as it is, or they can reduce the percentage of dividend. But they can never increase the dividend amount which has to be declared. Proposal is by board of directors, approval or declaration is by shareholders of the company. Sir, how do they do it? Doing that approval of dividend is called as ordinary business, and that is done by ordinary resolution only. No need to go for special resolution. Now once the company declares the dividend, the moment it declares, company shareholders, within 5 days of declaration of dividend, they should keep the entire dividend money in a separate bank account, which is to be in a scheduled bank. Once they keep it in 5 days, from the date of declaration I am talking about again, within 30 days from the date of declaration, that means 5 plus remaining 25 or 26, they should pay dividend to everybody. Every member who is eligible to get the dividend. Sir, who is eligible to get the dividend? If you remember, with respect to voting rights, we discussed there is something called as cut-off date. If you are holding shares on that date, then you are eligible to exercise the voting right. The similar way here also, if anybody is holding, company has to decide a cut-off date. If anybody is holding shares on that date, then you are eligible for dividend. Later you buy it, you sell it, it doesn't matter. Then, sir, to whom the dividend is paid? Either the dividend is paid directly to the shareholder or to the order of the shareholder. That means if the shareholder tells that, okay, pay it to my son, my daughter, somebody else, then they can pay it. We call it as beneficial interest. Section 89, sorry. Then after that, or either to the member or to the order to the member, or third one is directly to his bank account, which is registered with the depository or depository participant bank. But for any reason, if the company fails to pay dividend within 30 days of declaration of dividend, we call it as there is a failure to pay the dividend. Then company has to keep whatever the unpaid dividend amount is there in a separate account called as unpaid dividend account. And that unpaid dividend account has to be maintained in a company for a period of 7 years. Once that period of 7 years is over, so why that 7 years? Because somebody might have been out of station or out of country, they came to know after 1 year the dividend has declared, they can make an application to the company, they can claim the dividend at any point of time, up to 7 years. Sir, after 7 years, does the dividend gone? No. After 7 years also, the company, what has to do? Company has to transfer that unpaid dividend amount along with the shares with respect to those unpaid dividend amount to some account called as IEPF account, Investor Education Protection Fund account, which is maintained by central government. That is 7 years. After 7 years, within should be transferred to IEPF account. Okay. Okay, from normal account to unpaid dividend account, I think 5 days is there. 5 days alla. 7 days time is there. The moment 30 days over completes, within 7 days it has to be transferred to unpaid dividend account, then kept it for 7 years. If it is nobody claims the dividend, then IPF account. Once it is being transferred to IPF account, transfer the shares also which are related to dividend. Then if any member wants to claim the dividend after 7 years, they can make an application to IPF and they can claim the dividend and shares at a later point of time. And whatever that IPF account is there, that is managed by the central government, Ministry of Finance mainly, for the purpose of the money which is there with respect to IPF account can use it for awareness of the shareholders, conducting seminar, repayment of money. That is discussed under section 125. This is the overview chapter analysis of this dividend. So, dividend means anything which includes interim dividend. Dividend is shareholders' return on their investment capital in the company. It is part of the distributable profits paid out to the shareholders. It is a portion of profits allocated as payable to shareholders when it is being declared by the shareholders. Board will recommend the dividend and approved by shareholders in the AGM. The company cannot declare dividend, company means shareholders, higher than the rate recommended by the board. Company means shareholders. Then dividend is not liability unless until it is declared by shareholders with a validly constituted general meeting by passing an OR. That means the moment it is more than 50% votes it gets, then it is called as liability of the company to pay to the members. Until then it is not a liability. Dividend is declared as a portion of nominal or face value. That means the percentage when they'll give 20%, 30% dividend, 20% or 30% of not market price, but on the face value of the share. Whatever the face value is there, that face value multiplied by percentage. Or sometimes they directly give the dividend as 2 rupees per share, 5 rupees per share. So dividend can be prescribed way of rate or this amount per share or percentage on which has to be applied on face value or nominal value. Then there are two types of dividend. One is interim dividend. Any dividend which is declared by the board of directors at any time between the closure of financial year and the AGM. Between the closure of financial year and the AGM, that is called as interim dividend. Sir, from which sources they can give the dividend? Okay, I forgot to tell that one more thing. Point is, whenever company want to give the dividend, from which sources the company can give the dividend? The company has three sources to give the dividend. One is current year profit and loss. Whatever the profit they have, they can give it. Second year is past year profits and losses. If they have any retained earnings of the last year, they can pay it out of it. Third source is they will get some money from central government for the purpose, government authorities for the purpose of payment of dividend. There are three sources: current year profit, past year profits, and money from central or state government. Here for interim dividend, sources are P&L account or profits of the current financial year. Profit generated up to the quarter preceding to the declaration date. If you are declaring in the third quarter, any profit which is made till second quarter can be considered in interim dividend payment. Once you declare the dividend by board of directors, that must be ratified, means approved, subsequent approval by the members in an AGM. In case of loss, can the company give the dividend? Yes, but the limit is whatever the dividend they gave it in the last year, that last year and that last year. Take an average of that 3 years previous year's dividend, and in the current year dividend that should not be more than previous year's average 3 years dividend. Sir, if last year I gave 10% dividend, that last year 0, that last year I gave only 2%. That means 2 plus 0 plus 10 divided by 3. 10 plus 2 is 12. 12 divided by 3 is 4%. That means in the current year maximum percentage of dividend they can give is 4% of face value. That's it. So if there are any losses in the current financial year, interim dividend cannot exceed the average rate of declared dividend in the previous 3 financial years. It is like rate 1 plus rate 2 plus rate 3 divided by 3. This should be there. What is this? This should be less than, what is this? More than current year dividend. That means the average only should be more or equal to also okay. Current year dividend. Then the moment you declare the dividend, that should be deposited in a separate account within 5 days of declaration. And whatever the provisions applicable to final dividend also applicable for interim dividend, same to same. Then what is final dividend? Any dividend which is declared at the AGM is known as final dividend at the point. Then rate limitation. Sir, is there any limitation rate here? No, there is no rate limitation. Only limitation is members cannot increase the rate which is proposed by the board of directors. That's it. The comparison they have given, you can go through the comparison later. Can they revoke the dividend? They can ask this as an MCQ revocation part. Final dividend cannot be revoked, but interim dividend can be revoked with the consent of all the shareholders. That means 100%. So, classification of dividend based on nature of shares. The dividend will be paid for every share, whether it is equity or preference. But the difference between payment of dividend for preference and equity shares is on preference shares the rate is fixed. And whether the company has a loss or profit doesn't matter, they have to give a fixed rate of dividend. But in case of final dividend, they can declare equity shares, they can declare at any rate they want. I think some 7-8 years back, TCS has given 5000% of dividend. But the face value is only 2 rupees or 5 rupees, I don't know exactly. So preference dividends are non-cumulative by default, meaning they don't need to be paid if there are any insufficient profits. What are cumulative preference shares? Irrespective of the profit, company has to pay the dividend. If they are not paying in the current year, current plus next year, both the years dividend, you pay it in the next year only. Non-cumulative preference shares means if you don't have the profits, don't pay now. If you are paying in the next year, pay only next year's dividend, not the accumulation of dividend. Then equity shares, the rate of dividend on equity shares is recommended by BOD and maybe vary each year. Current year 10%, next year 30%, it is up to the board. It depends on the company's dividend policy and available profits after satisfying preference shareholders right. Then now the procedural part what we discussed is going to come. Declaration on payment of dividend 123 section. Dividend can be declared from current year profits after providing the depreciation. This is important. If you don't give any depreciation, then there is no dividend can be paid. No depreciation, no dividend. Or you can distribute from undistributed profits of the previous years, that means last year retained earnings, or both from A or B, or if you receive any money from central or state government with respect to guarantee given by the government, you can pay it. Current year profits, last year profits, and the money received from central or state government, or everything. So whenever you are paying the dividend now, first you have to do is what? Check current year profit, how much dividend you want to give. Then check did you give the depreciation or not in the current year. If yes, tick mark. Then you get a balance profit. Out of which check is there any last year losses, last year unabsorbed depreciation. First give for those things. After that whatever the money is available out of which you give the dividend. So any previous losses and depreciation must be set off against the profit of the current year before declaring dividends. Capital profits cannot be used for dividend as they are not considered as distributable profits. For example, you can write it as example what capital profits, revaluation reserves, etc. Then what are the profits? Louder. That can also can't be used because that will not come for P&L. Where it will it come for P&L? Anything which will not come in the P&L will not come for the net profits. Anything which is not a net profit is not a distributable profit. So balance sheet item is reduced, liability is received, then there only cash balance it goes. Then sir, do the company need to transfer any part of the profits to the reserves? Like for example, sinking fund reserve, any other reserve, it is up to the company, general reserve. No right is there in any section to tell that you should compulsorily transfer 20%, 30%, 40% for these categories. But for some companies it is there. For banking companies they have to transfer it 25% to the statutory reserves. Then what is free reserves? Free reserves means any reserves available for dividend distribution as per the labs, the latest audited balance sheet of the company, but it will not include revaluation reserve, fair value adjustment, and etc. Because they are not actual things, they are notional things. Whenever there is an inadequacy or absence of profits, no profits, then when the company has no profit, it may declare dividend from accumulated profits transfer to the free reserves. That means take the free reserves only and pay it. Sir, how much they can pay? The rate of dividend, how much ever you pay, that should be less than or equal to dividend 1 rate year 2, year 3 divided by 3. You do it 10 percentage. Current year dividend should be less than or equal to 10 percentage. That's it. And if there is no 3 years dividend they did not give, then condition only does not apply. Sir, then can I give anything what I want? No, you can't give dividend only, first of all. Then after you pay the dividend, see there are 3 conditions. This is important. 5 marks. Whenever a company does not have the profits or there are insufficient profits, what are the conditions that has to be fulfilled while giving the dividend? There are 3 conditions. First condition is the current dividend should not be more than or equal to average dividend of previous 3 financial years. This is first condition. Second condition is the moment you decide to do it, whatever the amount you want to withdraw from the free reserves, right, that should not be more than 10% of the paid up share capital free reserves as per the labs. Okay, look at what is total paid up share capital, what is the free reserves, add it, multiplied by 10%, you get so much amount of money, you can take it from free reserves. There is one more condition. What is that one more condition? Whatever you withdraw now money from free reserves, I am talking from 4th point, minimum point, after withdrawal, the balance of reserves, whatever it is left, should not fall below 15% of paid up share capital as per the labs. See, for withdrawing it is paid up share capital plus free reserves, but for checking only balance it is only paid up share capital. So that is a difference. For example, if I take equity share capital, I will directly take paid up share capital 100 lakh of free reserves 200, free reserves 200. You check it from our regular material. What is that remaining condition? Is it 15% of the paid up share capital or 15% of paid up share capital plus free reserves? Only paid up share capital. Okay. Now company want to give the dividend here. They have insufficient profits. Consider it is 300 is there. Now how much they can draw from the free reserves? You know, they can draw from 200. 100 plus 200 multiplied by 10 percentage is equal to 30. That means out of 200 they can draw 30. After you withdraw from 30 from free reserves account, how much it is left? 170. What is the paid up share capital? 100. 100 into 15? 15 percentage? 15. That means a free reserve should have at least 15 rupees in the free reserves part. Now how much it has? 170. There is no problem. But if you take an example of, paid up capital 500, free reserves 80 rupees. Now how much it is? 580. How much you can draw from this? Maximum is 10%. That means 580 into 10% is equal to 58 money rupees you can draw it from the reserves. After you draw 58, how much it is left? 22. Now you compare 15% of paid up share capital is 500. That means 75 will come. 15 5 is 75. After that, how much it is left? 22. That means you can't give 58 rupees as dividend. You have to compute or this comply with all the 3 conditions, which we are checking still 2 conditions only. Consider you decided to give 75 only. You compare the previous 3 years dividend. What is the percentage is there? That should not exceed, this dividend should not exceed that dividend. First check 10%, second check 15%, then third check that 3 years condition. If these 3 are conditions satisfied, then you can go for dividend. But here also one catch is there. You decided you want to give 75 rupees as dividend. Now, in the last year also there was some losses. Current year also you did not give losses or profit. Current year also you did not charge depreciation. First you give depreciation, loss, unabsorbed, unset off, everything. First you give it out of 75. Remaining money you can pay to the dividend to the shareholder. Yes, every loss has to be set off first, then every depreciation has to be given. Then only the dividend can be given. It is like no depreciation, no dividend. So the amount drawn from the accumulated profits, whatever you draw from accumulated profits, must first be used for set off of loss of current year, then only can be dividend can be declared. Then whatever we discussed in the three conditions, that is not applicable for government company. Not government company specifically, government company in which entire paid up capital is held by either state or central, or partly by centrals or states, multiple things. It is like 100% government company. Understood these conditions? This is will be definitely tested in the examination. Three conditions. Then deposit and repayment anyway. Dividend, when it is declared, it should be deposited within 5 days after the declaration. Not applicable for CGST, all those things. And dividend should be paid only to the registered holders or their order, or to the banker of the registered holder. And dividends cannot be claimed by purchase of until their name is registered. If shareholder authorizes the bank, payment to the bank is deemed to the payment of shareholder. First point is, consider I purchase the share. Now my name is still not yet entered in the register of members, but before that only company declares a dividend, then I am not eligible to get the dividend. The person whose name is entered in the ROM, register of members, is eligible to get the dividend. Then if there is any partly paid up shares, can the company give the dividend? Yes, provided AOA authorization is there and proportional dividend you can give. If it is 10 rupees share, 5 rupees paid up, and you give a dividend of 10 rupees, pay 50% of 10 rupees, that is 5 rupees dividend for every share. Company can provide proportional demand amount to paid up on shares if allowed by its articles. AOA authorization has to be compulsorily there. Can they pay dividend in cash? Definitely dividend can be paid via cash. See, when the moment I tell the word cash, it is not physical cash. Cash means monetary terms. You can't pay dividend by way of take the fan, take the building. No, that is not a dividend. Dividend has to be paid in cash, either via check, warrant, or electronic mode. Dividend shall be paid within 30 days from the declaration. Either if the dividend is paid via warrants, they must be posted to the registered address within the prescribed time. That means at least within 30 days, the dividend warrant is like a checkbook. You should send it to the respective party. You should post it, not served. Then this is exception, we already know it. Capitalization of company's profits or reserves is to issue fully paid up bonus shares or to pay any unpaid amount of shares. That is like bonus part mainly. And applicable to Nidhi company. Nidhis can pay dividend by crediting members account if not claimed within 30 days of declaration directly. And there are two exceptions, prohibitions, they can't give the dividend. One is when there is any repayment of deposits or something that is being defaulted. Second one is Section 8 company. Section 8 company also can't give the dividend. That is for charitable purposes. Whatever the profit they get, they put it back to the charitable purpose. Whatever we discussed, it is 123 section number. Then comes 124, that is unpaid dividend account. If the dividend which is declared but not paid or claimed within 30 days of the date of declaration, the company shall transfer the unpaid dividend amount to UDA within 7 days from the expiry of 30 days. Then, if the company fails to transfer UDA within specified time, it shall pay 12% interest per annum from the date of default. You transferred after 1 month, that means 1% interest you paid. The interest will be available to the members in proportion to their unpaid up amount, and any person entitled to money under unpaid dividend account can apply for the company for payment of unpaid dividend account. Then within 90 days of transferring the money to unpaid dividend account, this is also important. Once they asked in the examination, 4 marks. Unpaid dividend account only, full important this is. 90 days, that means 30 days is over, within 7 days you put it for unpaid dividend account. After that, from the date, first day 1, not 7 days, day 1 plus 90 days, within that period, you create a list of the people who did not claim. What is their name, what is their number of shares, how much amount is pending, every details has to be given. Name of the entitled members, last known address, amount of unpaid up dividend, and statement must be placed in the company's website and any other website as approved by the central government. After 7 years, whatever the money is there, that should be transferred to any money transferred to UDA which remains unpaid or unclaimed for 7 years, then that shall be transferred by the company along with the interest accrued to IEPF account, Investor Education Protection Fund. Then not only the dividend, they should even transfer the shares to the IEPF account also, whatever the shares are there with respect to those dividend. Then after that, you should company has to file a statement with IEPF. See, these are the number of people. You please make a note of it. If somebody comes tomorrow, you please dividend, pay dividend and give the shares to the person. And once that is being transferred to the IPF account, every member has a right to reclaim the transferred shares also, get it back from applying the IPF. If there is any contravention, company 1 lakh to 500 plus 500 per day up to 10 lakh. Officer in default 25,000 plus 100 up to 2 lakh rupees. This is about section 124. Then we'll discuss 126 first. Right of dividend or rights of bonus shares in abeyance. That means whenever you are having what is this, shares are transferred but registration is not done with respect to the name, then anything with respect to kept in abeyance means kept in hold. So if the share transfer has been delivered for registration company but that has not registered by the company, then company shall transfer the dividend related to those shares to unpaid dividend account first, unless registered holder authorizes the company in writing to pay dividend to the transferee. You don't pay it, you still keep it in unpaid dividend account. Abeyance on rights and bonus shares are, the company shall keep all the rights under 62 and bonus shares, that is 120, bonus shares is 63 under section 123(5) on hold for those shares whose transfer is not yet registered. For example, I sold some shares to Shashi. In the register of members, still my name is only there, Shashi name is not there. Now by the time they declare the dividend, then the company should keep it pending, transfer it to unpaid dividend account within 30 days. After 30 days, then when I become the member or when Shashi become the member, Shashi can go and claim that money from the company. They should keep it in hold. And if there is any non-compliance, there is some punishment for failure to distribute the dividend. That means section 123 they are talking, not punishment for 124 or 125. It is punishment for only 123. Then if it is not being paid or posted warrant within 30 days of declaration to entitled shareholders, then company is punishable even if not received by the shareholders on time. For the failure, if the company fails to do all those things within 30 days, director of the company may face imprisonment up to 2 years and fine of 1000 per day till the default continues plus 18% simple interest. This is the place where highest interest is there in a company, 18% interest. And there is no punishment. This is also an important 5 marks question they can ask. When there is no punishment, there is an exemption from punishment. That means you did all of your duty, but bank, that shareholder only closed the bank account. You are trying to contact him, he is not able to reach. Or there is an wrong account number given by the shareholder. Something has happened. In that case, there is no punishment. If dividend could not be paid due to operation of law told no dividend, nothing, keep it pending. Shareholders' directions for dividend payment cannot be complied with, and the company has informed the shareholders also. Let's see, because of these things, it is not possible to pay the money. There is a legal dispute regarding ownership of the shares or right to receive the dividend. Somebody is telling, sir, these are my shares, this is my shares. When a father dies, two sons started fighting. Dividend, I should get it, you should get it, something. Then company will keep it abeyance. You go and fight, come to a conclusion, then I will pay the dividend to that party. Then dividend has been adjusted against the dues owed by the shareholders to the company. What are the dues owed by shareholders to the company? Unpaid up money of the call. So that is the money which is owed by the members to the company. That has to be considered. 10 rupees share is there, 5 rupees paid up. Instead of giving 5 rupees dividend to him, make the 10 rupees share as full 10 rupees share. Because 5 rupees anyway, you should give it to him, call another 5 rupees back. No need of all these things. Convert that into fully paid up shares. Or default caused by external factors like banking failure, postal strike, etc., lockdowns. You did not get the dividend within the specified period, we can't do anything. That is out of my control. Then last section is 125. IEPF account, Investor Education Protection Fund account. Main thing which we have to discuss here is what are the credits to the account. The credit means income to the account. What are the debits, expenses from the account. So if the company, the following amounts are credited to IPF account, you should remember 5 marks they can ask this also, or 5 marks they can ask this also, 5 or 4 marks. If there are any donations or grants received from central government due to appropriation of by parliament, that also has to be credited. Donation from central government or state government, companies or other institutions for fund purpose, or amount of unpaid dividend account, that is also credited here. General reserve account of the central government, IEPF account under 1956 Act. That means whatever the money is there, that will be again credited to the 2013 account. Interest or other income received from investment made with the fund. That means you have some 10 lakh crores that you invested somewhere, then you got interest, that is also credited to fund only. So any amount disgorgement means atikramana, or disposal of securities seized by wrongful doers, that is also credited here. Application money for securities remaining unclaimed for 7 years from the date of payment, then also it should be transferred here. Then maturity deposit unclaimed for 7 years, everywhere it is 7 years only, deposits, debentures, equity shares, everything. Mature deposit debentures 7 years. Interest on amounts mentioned in class H2J, that is also H2J means whatever we told earlier. Interest on those things. Sale proceeds of fractional shares unclaimed for 7 years, etc. etc. You can just go through those points. Then utilization comes. You can use it for refund of unclaimed dividend, mature deposits, mature debentures, or application money along with the interest. You can do it for a promotion of investor education, awareness and protection. You can distribute the disgorged amounts among eligible applicants. Atikrama, you went and or this disgorged some other property. Later, court told that no, it is a genuine property. Then you should refund that back to the party. Reimbursement of legal expenses of the class action suit under 37 and 245, and other incidental purposes as per the rules under IPF, etc. That fund has to be audited by C&AG every year because it is public's money. And IPF also has to prepare something called as annual returns continuously and every year by year. That's it. Dividend chapter done within half an hour. It is 11:45, not 12. Go through it once and go through the exam tips also. 11:45. 11:10 we started. That means 35 minutes. Dividend gone. If you want the full video on dividend, that is almost 2.5 3 hours. That is still also there in YouTube only. Do that. Done. Have you done with this key exam tips? ಹೌದು. ತ್ರೀ ಕಂಡೀಷನ್ಸ್ ಅಲ್ಲ, ಅದು ಫಸ್ಟ್ ಕಂಡೀಷನ್ ಅಷ್ಟೇ. ತ್ರೀ ಆವರೇಜ್ ರೇಟ್. ಎರಡಕ್ಕೂ ನಾವು ಪರ್ಸೆಂಟೇಜ್ ಇದೆ. ಎನಿ ಡಿವಿ ವೆನ್ ದೇರ್ ಇಸ್ ಇನ್ಅಡಿಕ್ವಸಿ ಆಫ್ ಪ್ರಾಫಿಟ್. ಹಾಂ, ಇಂಟ್ರಿಮ್ ಆದರೂ ಫೈನಲ್ ಡಿವಿಡೆಂಟ್ ಇಂದ 3%. ಯಾಕಂದ್ರೆ ಎವ್ರಿ ಇಯರ್ ಇಂಟ್ರಿಮ್ ಡಿವಿಡೆಂಟ್ ಮಾಡಿರ್ಲಿಕ್ಕಿಲ್ಲಲ್ಲ ನಾವು. ಸೊ ವಾಟ್ ಎವರ್ ಇದರಿಂದ ಆ್ಯನ್ಯುವಲ್ ಡಿವಿಡೆಂಡ್ಸ್ ಇಂದ ರೇಟ್ ತಗೋಬೇಕು. But the questions, and let me know answer. Jan 26 exam question only. What is the answer for first one? Which one? ABC proposed to final dividend of 3 per equity share. Profit is 1,350 lakhs, 13.5 crores. Accumulated retained earnings is 2,000 lakhs. Free reserves is 500 lakhs and 100 lakhs for 100 lakh shares. Proposed dividend payout is 300 lakhs. Unless whether ABC is eligible to declare dividend is anyway they have the current year profit only 1350, right? No need to satisfy any condition. That three conditions. If you are using that past year profit, then only that 15%, 10% has to be there. Out of accumulated profits of the previous years only, yes, they can also declare. If you are using that accumulated profits, 10% and 15%, you have to make sure that should be there. One thing we should check is the depreciation, whether the depreciation is provided or not as per schedule 2. Second question. Okay. ಇದ್ರಾಗೇನು ಕ್ವಶನ್ ಕೇಳಿಕ್ ಭಾಳ ಇಲ್ಲ ಮೇ ಬಿ ಐ ಪಿ ಎಫ್ ಅಕೌಂಟ್ ಒಂದು ಕ್ವಶನ್ ಕೇಳ್ಬೋದು ಓಕೆ ದಿಸ್ ಥಿಂಗ್ ಕ್ವಶನ್ ನಂಬರ್ 5 RTP May 25. I think it is entirely the procedural part within 5 days, again 30 days, again 7 years. You should distribute the answer and write it. 5 marks. Two provisions are there, 123 and 124. We should combine those things. Which question? Question number 5, right? Done. Understood dividend. Now it is 12 o'clock. Tomorrow, if you do it, GCA We'll take less time iOS, FEMA and LLP. The GC, iOS, LLP, FEMA. Okay, that can be done in tomorrow's class. And even foreign company also. This chapter number 9, accounts of companies, which consist of section 128 to 138. 11 sections are there here, in which section 128 starts with the books of accounts and it goes up to 138 internal audit of the company. So we'll discuss small sections in the initial time, then at the end we'll discuss this thing. So first one is section 128. What is 128? 128 is talking about books of accounts. Sir, what is books of accounts? Books of accounts means it is any record. It is any record in which it is the records which are maintained by the company, which are supporting either the balance sheet items or the P&L items or the what is this, cost record items or trading related accounts items. So financial statements are also there. Financial statements are a summarized version of all the transactions. The detailed version of the transactions are called as books of accounts. So this books of accounts includes records of money received and spent by the company and related matters. What is money received and spent by the company with respect to unrelated matters? That is P&L related. Then sales and purchase of goods and services. This is trading assets and liability of a company, balance sheet and cost items. Cost. If you maintain anything with respect to, see, these are related to these things. Books of accounts includes books and paper, deeds, vouchers, writings, documents, minutes, registers maintained on paper or in electronic form, etc. Everything has to be included. Then comes, it is a small definition, financial statements. We know that there are 5 elements of financial statements: BS, PL, cash flow statement, SOC, and notes to accounts. It is as per schedule 3 only. True and fair view should be there, and accounting standards has to be followed. What is financial year? Period ending on 31st March of every year. But if the company incorporated on or after 1st January, then year ends on next 31st March. If not, current year 31st March. But here one exception can be asked an MCQ. When I was doing, they asked 2 marks question. When I was doing my CA intermediate, there was an amendment in this foreign company part. They asked that question for 2 marks. One financial year amendment was there, foreign company also there. So this financial year tells that even though you are operating in India, if you don't want to follow April to March as financial year, why? Because I am a subsidiary company where my books of accounts and financial statements are to be sent to the holding and they should do it for consolidation. But they are following Jan to December. If I send April to March and there is a Jan to December consolidation, there will be mismatch. Please allow me to follow Jan to December as my financial year. If central government is or this satisfied, they can grant that Jan to December also as a financial year. Now books of accounts. Every books of accounts of the company, every company shall prepare books of accounts and financial statements for every financial year, and which must give a true and fair view regarding the state of affairs of the company, regarding the branch offices also, and all those things has to be transactions at the registered office as well as branches has to be recorded in that. So every books of accounts of the company shall be kept on accrual basis on a double entry system compulsorily there. There is one question on this concepts only. One company is there want to maintain on a single entry basis and cash basis system. Please explain as per the Companies Act. No, it has to maintain on accrual basis and double entry system, which is giving true and fair view of the financial affairs of the company. And that has to be accrual basis. As and when they occur, they have to, regardless of cash came or not. Double entry means for every entry there is one more what is this, opposite entry has to be passed in other account. Sir, where should we keep the registered of books of accounts? Everything has to be kept at the registered office, or If you want to keep it somewhere else, books of accounts as well as financial statements, if you want to keep it somewhere else, yes, you can keep it, provided that 1/10 of the number of members of the reside in some other place, that has to be there. You can keep another location. The board can decide to keep the books at other place in India only. They can't go outside India. Within 7 days, the company shall file with ROC the moment they decided to keep it in some other place, indicating the address of such place. If it is branch office, regarding the branch office books of accounts, where should they keep it? Is it in the head office or branch office? Branch books can be kept at the branch only, provided they send a summarized returns to the head office for the purpose of making entry in the main books. If the company has a branch office either in or outside India, it must maintain proper books of accounts. It means branch. At that office, complying with 128.1, if the books are maintained at outside India, quarterly summary returns shall be sent to the registered office and kept open for director inspection, not the members inspection, because books of accounts are not open for members at all. Only financial statements are open for members. And inspection by directors, any director can inspect it, but during the business hours only it can be inspected. And whenever the director wanted to inspect, every officer and employee should give reasonable assistance during that inspection. If the financial information there outside India, that means if a director needs any information which is there outside India, then he should give a written request to the company that within what period you want and what information you want. Then the company must provide that information within 15 days of the request. I requested today, within 15 days it has to bring the information and it has to give it. Then again, directors can seek information individually, not through an attorney or agent or representative. That means if you want, you should personally go and get it. And whatever the books are there, everything has to be preserved for how many years? 8 years preceding the relevant financial year. That means 25-26 ended on 31st March 26. So from here 31st March 26 to 8 years you have to maintain. If it is a newly incorporated company, then preserved for the entire period since incorporation. That means I'm telling that, sir, you should maintain books of accounts for 8 years. No, sir, I came into existence only last year. Don't worry, then whatever the period you are in existence, you keep it maintained. If there is any investigation that is ordered by central government and they told you don't dispose these books of accounts or financial statements till the investigation is completed, then you might be required to extend the preservation of books of accounts for a period of exceeding 8 years, only when there is any investigation which is happening by the central government in your company. Sir, who are responsible for maintenance of books of accounts or financial statements? The MD, whole-time director, who is in charge of finance, as well as CFO. Or if there is none of that person, any person who is authorized by board with a will duly comply with 128. If they don't do it correctly, for the responsible person, 50,000 to 5 lakh rupees per offence. Per offence means you did not give the inspection, yes, 50,000 to 5 lakh. You did not maintain as per double entry, yes, 50,000 to 5 lakh. You did not maintain as per accrual, again 50,000 to 5 lakh. Every offence, 50,000 of this thing. When I tell books of accounts, sir, how do we maintain the books of accounts? Don't need to be maintained always at a physical part. You can even maintain in an electronic form also. But provided if you are maintaining an electronic form, you should give the details of the electronic service provider, whether you are taking service from inside India or outside India. For example, if you are maintaining in Google Drive, then Google is outside India, you should give the details where the server is located, who is the person responsible for all those. Everything has to be given for that company. SAP is not an Indian software. Tally. The company is using accounting software. April 1, 2023, from there it has come into existence. Audit trail must record each transaction. You know what is audit trail? I think we discussed in audit also, in law also we discussed. Audit trail means whenever somebody makes any modification, addition, change, deletion, that has to be entered, who made it, at what time, what was the original entry, what was the updated entry, everything has to be recorded. That flow of all the transactions from the beginning, origin till the end is called as audit trail. That software has to be there. So edit log must track all the changes made to books with the dates of changes. So audit trail cannot be disabled. That means you can't disable whenever you want, you can't enable whenever you want. It has to be there all 12 months a year. Books must be retained in original and accurate format and legible and capable of being displayed clearly. Backup of books and papers must be kept in several servers physically located in India. daily even if the data stored outside India. You should keep it backup on a daily basis. A proper system must exist for storage, retrieval, display, printout of records. This is about section 128. Then comes continuing section, that is 129, regarding the financial statements. So what financial statement should be there? The financial statement should always give a true and fair view of the affairs of the company, and every financial statement has to be prepared as per Schedule 3 of the Companies Act, because we are discussing Companies Act only. In Schedule 3, you may prepare any of the category. For example, Table A, Table B, Table C, Part A, Part B, Part C. Part A for AS, Part B for Ind AS, Part C for NBFC, Division A, Division B, Division C. Yes, that for this division. That should comply with accounting standards. And whenever you prepare the financial statement, that you should lay down before AGM of Board of Directors of each financial year. And if you are a company but registered under specific act, for example, bank, insurance, maybe electricity, something else, then you can follow your respective formats, not the Schedule 3. IRDA Act, you can follow it. Banking Regulation, banking, you follow it, not with respect to this thing. If you are a listed company, then you should even comply with SEBI regulation. See, then again, CFS requirements. Is it compulsory for every company to prepare CFS? No. If any company is there with having a subsidiary or associate, then they should prepare the consolidated financial statements. Whatever the normal provisions applicable for SFS, standalone financial statement, the similar provisions are applicable even for CFS also, consolidated financial statements. Double entry system, accrual basis, Schedule 3, everything has to be same. Only change is you should add your company data along with the other subsidiary or associate company data. But here one MCQ point they may test, or maybe 4 marks question also. It is, a company has to compulsorily prepare a CFS, consolidated financial statements, if they have a subsidiary, and they can add associates figures also in that. But if the company has only associate, then only for the purpose of associate, don't need to prepare CFS. If you prepare CFS, you add associate figures also. Sir, why do you prepare the CFS? Because of the subsidiary. If we have subsidiary and associate, add all the 3 things and prepare it. But if you have only associate, only for the purpose of associate, don't prepare CFS. Standalone is sufficient. You just bring the post incorporation profit, current in the minority interest, that has to be done. So every company, if the company has subsidiary or associate, must prepare CFS at the AGM. Attach the separate statement and salient features of subsidiary and associate in AOC 1. Consolidation shall be made in accordance with Schedule 3 and applicable AS, that is AS 21. So a wholly owned or partially owned subsidiary where all the other members have been intimated and not objected. This is an examination question again. There is some exemption with respect to preparation of CFS. Sir, what is that exemption for preparation of CFS? That is, 3 points are there here. Consider I am A limited, not A limited, A private limited. There is B limited. There is C limited. Now I am holding 60% here. Somebody else is holding 70% in me. Now I am A limited. Consider if I am in A limited, I should prepare consolidated financial statements of C limited and mine, and B will prepare A and C also including. Now as a limited, you don't need to prepare a CFS provided see, you are holding 60% in C limited, na? Some other 40% is also held by somebody else. You take the intimation to those people that we are not preparing the CFS. Do you have any problem? If they tell no, that's okay. Second criteria is you should not be listed company. You should not be in the process of listing also. Maybe public or maybe private, but not a listed company. Third one is, if you are not preparing, you are one of the ultimate holding companies preparing consolidated financial statements, including this figure as well as this figure also. 3 conditions. One, you are an intermediate parent company. You are not listed company, and other members did not object for non-preparation of CFS, and one of the ultimate parent companies preparing CFS, including your as well as the other company figures also. Then you are exempted from preparation of CFS. Read it, you will understand. A wholly owned or partially owned subsidiary where all the other members have been intimated, other members have been intimated and have not objected, they did not object, and your securities are not listed, and third condition is ultimate or intermediate holding. Why this intermediate holding? Consider I am A, on top of me B is there, on top of B C is there, on top of C D is also there. Either B can prepare or C can prepare or D can prepare. ನನಗಿಂತ ಮೇಲೆ ಇರೋರು ಯಾರಾದರೂ ಒಬ್ಬರು ಪ್ರಿಪೇರ್ ಮಾಡಿದ್ರೆ ಸಾಕೋಯ್ತು ನಂಗೆ, ಅಲ್ಟಿಮೇಟ್ಲಿ ಮಾಡ್ಬೇಕಂತ ಏನಿಲ್ಲ. ಕಂಪನಿ ಪ್ರಿಪೇರ್ಸ್ ಇಟ್ ಫೈಲ್ಸ್ CFS with ROC complying with applicable financial standards. Then if you are not complying with accounting standards or Ind AS, then you should give the reasons for non-compliance. What is the deviation? What is the reason for deviation? What is the financial effect? This is important. 3 marks they may ask. Once they asked, I think. Then if you don't comply with 129, there are some penalty provisions. Then periodical financial statements are also there. Financial results. So what is it? Quarterly financial statements. Those things has to be prepared. So for which company it is compulsory? For all the listed company it is compulsory. And unlisted company also required to prepare periodical financial results in the prescribed form and frequency approved by board, subjected to audit or limited review, and filed with ROC within 30 days of completing a relevant period. Listed company to anyway compulsorily prepared as per SEBI rules. Unlisted company, then central government, if they want any company specifically to be prepared, then they have to prepare it. This is 129. Please go through that. We can take some 5-10 minutes break, then we can continue. So next section is section 130. That is, they generally tell that once you close the books of accounts of the respective financial year, once it is approved by the board of directors, you can't reopen that books for the purpose of making any entry, or you can't alter any entry in the books of accounts. But they tell that even when somebody feels that books of accounts are mismanaged or misstated by the directors, anybody can make an application to the tribunal or court, and court can order for reopening of books of accounts. Sir, when the court can order the reopening of the books of accounts, when somebody made an application, generally central government, income tax, SEBI, somebody has made an application to court, then they can reopen. Once they reopen, for how many years they can reopen? For how much it is possible? It is because anyway books of accounts, the retention period is only 8 years. They can reopen maximum of 8 years financial books of accounts. But in case of those books of accounts which are where central government has ordered for investigation to preserve for a longer period of time, then they can open for the books of accounts also. A company cannot reopen books of accounts or recast its financial statements unless it is requested by any authority or government in application to be made to a court or competent jurisdiction or tribunal. Then the court or tribunal may order for revision and recast of financial statements if the earlier accounts were prepared fraudulently or the company's affairs were mismanaged, leading to unreliable financial statements. Then the court or tribunal shall give notice to applicant and consider it representations before passing an order. That means court will give the order to, and what is this, notice to the company. See, income tax is telling that something is wrong in your books of accounts. You please tell me, give me the I'm giving you the opportunity, show the cause why I should not recast your books of accounts. That has to be done. Then once it is recasted, that shall be final. You can't again retouch that. Then what is the time limit for reopening? Generally it is earlier than 8 financial years immediately preceding the current financial year. But if the central government was ordered, then longer than 8 years also is possible. That is about 130. What is this? It is not voluntary. It is the revision of books of accounts or financial statements on order of tribunal or court when application is made by either central government, SEBI, income tax authority, or any other things. Then they can order or this tribunal or court should give an opportunity of explanation to the company. After that, they can order for recast. Once it is recasted, it is final. They can recast 8 years or more than 8 years if the central government has ordered that thing. Then comes 131. 131 is mainly based on voluntary revision of financial statements as well as board reports. Sir, what is voluntary revision? When the company only comes to know that something is wrong in my books, financial statements or board's report, then they only have an option to voluntarily revise. But before revising that, they should first get the prior approval of the NCLT, that is tribunal. And max to max, the revision that they can make voluntarily is 3 financial years. They can't go more than 3 financial years. That means 25, 26, 24, 25, 23, 24, 22, 23. That's it. They can't go for more than that. So if the directors find that the financial statements or board report does not comply with 129 or 134, 129 is financial statements we discussed, 134 is board report, they can prepare a revised financial statements or revised board report for any of the 3 preceding financial years. Any of the 3 preceding financial year. How can they prepare it? First, revision can only occur with the prior approval of the tribunal through an application by the company. That means in the 130, what was happening? 130 is some third party like central government, SEBI is making an application to tribunal. Here you are only making application so that you can revise it voluntarily and file an application to NCLT 14 days of board's decision the moment you wanted to decide. Once the tribunal gives the order, that certified tribunal order shall be filed with ROC regarding, see, last year we filed that financial statements, please rechange that and put it this as my financial statements. And tribunal will notify the central government, every authority, whatever it is there, regarding the order issuance. Then a revised statement or report can be filed only once in a financial year. Once revised, it can't be revised again for the same period. For example, say I told you can revise 3 financial years. Now we are in 26, 27 started, 25, 26, 24, 25, 23, 24. 23 to 26, 3 financial years are there. Now you felt 23, 24 was wrong. You went to the court, made an application, revised it, done, ROC comply, everything has happened now. Now you are deciding, now you are feeling 24-25 is also wrong. Can you go and revise it? Yes, possible, because they tell you can't revise the same thing further related to same period. 23-24 you can't revise second time. But within last 3 years you can revise every year one time. That is possibility is there. But you should get the prior approval of the NCLT for the purpose of doing that. After NCLT gives the approval, general meeting shall be called. Reasons for revision published in the 2 newspapers. And at the general meeting, you give the revised financial statements and board report, and the auditor statement will be considered. And approved revision shall be filed with ROC within 30 days of general meetings approval. The similar procedural part. Nothing is there. This is about 131. Very rare that is being asked, 130 and 131. Then 132 we'll see it bit later. 133 to anyway one line, that central government to prescribe accounting standards to be followed by the companies. That I think I did not give only that section, or one line may be there. Here it is there, but not part of that. Section 133. This line. Central government has authority to prescribe some accounting standards as recommended by ICI in consultation and with after examination by NAFRA. Until NAFRA is constituted, central government prescribe accounting standards issued based on ICI recommendation based by NACAS. That's it. This is 133 section. That's it. Nothing else. Whatever the penalty is there, that is 132's penalty. We'll do that later. Before that, first we'll do other sections. 135 also we'll do it bit later. Right, it is the right of every member. It is the right of every member to get the copies of audited financial statements. If you remember, I think I told the timeline. The financial year ends again. They prepare the financial statements. Board will conduct a board meeting and approve the financial statements. Then audit is conducted. Once audit report is given, that is being adopted in the general meeting. That's the timeline, if you remember, under which audited financial statements, right of every member to get it. That means whenever the company is sending a notice to call for the AGM, along with that they should send something called as annual report of the company. That annual report should consist of this financial statements also, and that financial statements has to be audited. So company shall send financial statements, audit report and other required documents at least 21 days before the general meeting. It is like at the time of sending the notice only you can send it to every member of the company, debenture holder, other entitled persons also, that is auditor or director, etc. Everybody who is entitled to do that, you can send it. Here the same exception for section 8 company, 14 days is applicable instead of 21 days. Notice consent. If the documents are sent less than 21 days, then you can get that 95%. Remember, 95% of the total voting power or 95% of the share capital in case of company limited by guarantee, that has to be, you should get it. It is like shorter notice consent, 95% criteria. Then in case of listed company, it is whatever I am discussing, it is only for listed company. They may ask this as an MCQ part. Financial documents, documents are made available for inspection at the registered office during the working hours for at least 21 days before the meeting. That means the moment you send the notice, from that date you should make available to these things for verification at the office. The statement containing a salient features or copies of documents are sent at least 21 days before the meeting, unless a shareholder specifically requests for full financial statements. You should send what is this salient feature? Salient feature means summary version. You remember that abridged prospectus? It is like abridged financial statements or annual report has to be sent. Listed company must publish their financial statements on their website of the company, and every listed company with subsidiaries must publish separate audit financial statements for each subsidiary on its website. If you are having foreign subsidiary and you are a listed company, they must prepare the you must prepare the CFS under its country's law, and CFS of foreign subsidiary must be published on the listed entity's website. If the foreign subsidiary is not required to be audited, then unaudited financial statements may be published. In which language? Provided if it is in English language, you do that. If the language is other than English, then you should get a translated copy. Generally, there is one word missing. It is certified. Translated English copy has to be uploaded. Consider it is in Chinese language or Japanese language. There is something called as XBRL, Extensible Business Reporting Language, where it is acceptable for almost 150 countries. You should prepare that and get the approval certified, then you can publish that. Then if you are a Nidhi company, whenever you are supposed to give the notice or anything, compliance with the shares of face, if there is any member who is holding face value of 1000 rupees or 1%, then you give a notice to him. If it is less than that, you just give the advertisement in newspaper, that is sufficient. I think we discussed this point in the yesterday or day before yesterday. Publish or public notice in a newspaper circulated in the district where registered office is located, time, date, venue, etc. And it can be inspected at the registered office. Only here you can write 1% of paid up capital or 1000 rupees face value. Notice to be given. Second part, other members. Advertisement in newspaper is sufficient. Advertisement in newspaper is sufficient. They don't need to give separate notice for everybody. So remember, regarding the proxy part, in case of Section 8 company, who can be a proxy? Only an other member of a Section 8 company has to be a proxy. But in case here it is not there, I just recollected that. In case of other companies, anybody can be a proxy. There. And display financial statements and enclosures on the company's notice board. Allow members to vote in person or through proxy at AGM. It is general. There. If you are a listed company and public companies, see, listed company no limit. Public company means net worth more than 1 CR, turnover more than 10 CR, then you should send financial statements through electronic mode. Sir, other than, sir, all the listed company compulsory E mode. Public company, if it is net worth is less than 1 CR, it is an condition, and turnover is more than 10 CR. Our net worth is more than 1 CR, our turnover is less than 10 CR, then E mode is not mandatory. You can send it, but not mandatory. Physical dispatch, other cases it is recognized mode of delivery. Generally it is speed post, registered post, or courier services. This is about 136, section 136. Then comes financial statements has to be filed with ROC. So when should they file? So first, which financial statements has to be filed with ROC? Every company shall file financial statements along with all required documents duly adopted at AGM. Look at the language, duly adopted at AGM. What is duly adopted at AGM? Duly or this members of the company has adopted them. That means they gave approval with respect to everything with ROC within 30 days of AGM. Simply they are trying to tell that you should file with ROC the adopted financial statements only within 30 days of AGM. Sir, if the members is not adopting the financial statements, or if the AGM is only not conducted, then adoption will not happen. Adoption is not happening, then don't we need to file the statements? Yes, we should file the statements which is unadopted on a temporary basis. Temporary basis. Once it is adopted, you should file the final version of the adopted financial statements. Applicable forms are not required. The following companies must file the financial statements in XBRL format in AOC4, which are listed companies and their Indian subsidiaries. Other companies, not maybe public or private, paid up share capital is 5 CR or more, or turnover is 100 CR or more, or any company which is required to follow Ind AS. not AS, Ind AS. 4 companies compulsorily file in XBRL format. They may ask this 4 marks question. XBRL format requirement. One is listed company plus Indian subsidiaries. Then second one is company with CUC of more than or equal to 5 CR. Then company with turnover of more than or equal to 100 CR and Ind AS following company. Ind AS compliant company. These are the 4 types of companies which has to be compulsorily filed. When I say this company, these 3 can be public also, this can be private also. There is no distinction between that public company, turnover, nothing. It is just a company. And some exemptions are there. See, once XBRL you are filing, then it is continue to file that XBRL even though you are less than 5 CR paid up capital, less than 100 CR turnover, or you are not following index, doesn't matter. Once it is applicable for permanently. Even you are out of that condition. And some companies exempt, that is NBFC, Housing Finance Corporation, banking and insurance sector. It is like special act companies. Special act companies. They are not required to follow XBRL format while filing financial statements adopted. If the financial statements are not adopted at the AGM, then such unadopted only should be filed with ROC within 30 days of AGM. Then they will record them as a temporary, they will call it as provisional basis. The adopted financial statements are filed after the adjourned AGM, because 30th September they kept the AGM, it is adjourned because of the quorum. Then 30th September, within 30 days, you file it provisional unit, then you can file it this thing. Adopted financial statement shall be filed with 30 days of adjourned AGM with applicable fees. In case of OPC, that 30 days, 6 months, nothing is available. Within 180 days from the end of financial year, you should file that financial statements. Here it is not 30 days from AGM. This is maybe an MCQ point. If the AGM is not held, then they should file for this financial statements along with the required documents when within 30 days from the date when the AGM should have been held. When the AGM should have been held, 30th September is the due date. So from the due date, 30 days you file it, and you file along with that reasons for not holding the AGM also should be filed with the ROC within 30 days from the last date which is AGM should have been held. If not, then penalties are there. Then internal audit is there, section 138. Internal audit is applicable for all the listed companies, there is no doubt about it. All the listed companies compulsorily required to do that. See, these 2 things, not 2, 3 things. They can ask for 5 marks. Applicability of internal audit. Here, listed company to anyway compulsory. If you put it the other way, internal audit, it is applicable for listed company, unlisted public company. It is applicable for private company also. It is applicable for private company also. Sir, what is unlisted public company? If it satisfies any of the conditions, if it satisfies any of the 4 criteria. First one is paid up capital is more than or equal to 1 CR. 1 CR, have a look into it, 25 CR. Okay, correct. 50 lakhs or 50 CR. Okay, then we will write it by way of deposit more than or equal to 25 CR paid up capital more than or equal to 50 CR, outstanding borrowings more than 100 CR. Look at the language, it is more than 100 CR, that's it. Or turnover is more than or equal to 200 CR. Borrowings is just more than 100 CR, right? Or more than or equal to? Is it? Okay. Then private company means the same thing, provided only these two conditions are applicable. 25 and 50 are not applicable, 100 and 200 is applicable. If you are falling under this category, then internal audit is appointment is compulsory. So when I say you should do the internal audit, who can be an eligible person to do the internal audit? Company can decide the eligible person. Company can decide, maybe CA, CMA who is in practice or who is in employment, or any person who they decided is a suitable person can do the audit of internal audit. And the internal auditor is a employee of a company. The salary, everything is decided by the company directors only, and appointment is also done by directors. So he is not responsible for an outsider. Hmm? Any doubt? 25 CR or more, 100 CR or more, 200 CR or more, 50 CR or more. Okay. 25, 50, 100, 200. Paid up deposits, paid up capital, borrowings, and turnover. Here also 100 CR or more, 200 CR or more. Outstanding. Everything is outstanding. This is about 138. We left with two sections, right? CSR and NAFRA. Now we'll discuss CSR section first. CSR, Corporate Social Responsibility, section 135, 135. I think cell got over. In a minute. Open that CSR. What you are doing? Always expect the unexpected. ICS. So 135 corporate social responsibility. See, any company which is operating in India has to comply with Companies Act 2013. One of the provision of Companies Act 2013 is section 135, that is corporate social responsibility. So they have to spend at least 2% of their average annual profits of the last 3 years for the purpose of CSR activities. Sir, what is CSR activities? Any activities which are specified under Schedule 7 of Companies Act 2013 are called as CSR activities. Either those activities can be conducted by the company itself, or company can give that money to any NGOs or any NPOs, non-profit organizations, so that they can conduct it. So what activities are there? Mainly maybe education, health, hunger, poverty, women empowerment, protection of animals, protection of environment, and multiple things are there. You can do it. But there are certain activities which you do that will not be considered as CSR. For example, you do any activity for under which it is benefiting only your employees of the company. Then it is not called as CSR. For example, you are giving free education for employee children. No, it is not CSR. If what is CSR? Even though he is not connected to you, he should be what is this, eligible to get that benefit of those things. So that is called as CSR activities. Now, sir, how much should they spend? I told it is 2% of average annual profits of the last 3 years. Last year, how much is the CSR amount? Sorry, how much is the profit plus that last year plus that last year? Similar to dividend part, take the profit divided by 3. That average profits will come. That average profits into 2%. That 2% you have to spend it in the current year. Sir, on what activity? Maybe revenue activities, maybe capital expenditures. It is up to you. But if your expenditure, if you are falling under any of the 3 criteria, that either your net profit is more than 5 CR, more than or equal to 5 CR, or net worth is more than or equal to 500 CR, or turnover is more than or equal to 1000 CR. In that case, you should do what? You should constitute a CSR committee. If the CSR, that means if you are not falling under any of those criteria, I am not telling that you should not spend the money. You should definitely spend the money, but board of directors only can take care of that. But if you are falling under net profit 5 CR or more, or net worth of 500 CR or more, or maybe 1000 CR or more of turnover, then definitely you should constitute a CSR committee. They will decide how much money has to be spent, on what activities it has to be spent, is there any unspent amount, is there any excess amount spent, everything they will take care. But even after fulfilling those criterias, the amount which is required to be spent in the current year comes less than 50 lakhs, then also no need to do CSR committee. If the amount that has to be spent on a CSR activity is less than 50 lakh in the current year, no CSR committee. The moment you do the CSR committee, then who should do that? Board of directors will take care regarding the spending of money. The moment you do the CSR committee, that should consist of how much? At least one independent director in case of public companies. In case of private companies, if the private companies are not required to appoint any independent director, then no need to have independent director. At least 2 people should be there in CSR committee. Now, sir, consider my average annual profits is 100 CR, 2% is 2 CR I have to spend. But actually I spent 3 crores. Actually I spent how much? 3 crores. Is it any benefits I have? Yes, whatever the excess you spent in the current year, you can take it forward to the next year and set up in the next year required spending. Sir, how many years you can take it forward? You can take it forward for next 3 succeeding years and you can set it up. If you can't utilize it in next 3 years, then you have to that money will get lapsed. But if you are spending in a deficit amount, instead of 2 CR you spend 3 CR, that is first category. Instead of 2 CR you spent 1.5 CR, that is second category that I am explaining now. Then you have to see whatever the money which is shortage you have spent, the money which is remaining, is it regarding an ongoing project or other than ongoing project? That means you took a project for 2 CR, you completed in 1.5 CR, remaining 50 lakhs you had extra, you did not spend it on any activity. Or you wanted to spend 2 CR, you already spent 1.5, remaining 50 lakh has to be spent, but the project is still ongoing. As of now, that is not required. In that case, the company has to give the reasons why that unspent amount is there. Is it regarding the ongoing project or other than ongoing project. If it is regarding ongoing project, for example, I wanted to construct a school building for 2 floors. One floor I already completed. Contractor told, sir, we will give 3 months gap because that flooring has ceiling, flooring, everything has to get set. So that curing we will do it after 3 months. We will do it. The financial year everything is end now because I have to tell that, sir, I did not spend entire amount. Then if it is regarding ongoing project, open a separate bank account, special bank account, keep that money in a separate bank account. Once you do continue that activity, take that money and use that. If it is regarding other than ongoing projects, that means you whatever the purpose you have taken, that purpose is completed. Now this thing money still you have unspent money is still left. Then you spend or not spend, transfer that money to an account called which is specified generally IPF account. You should transfer that money to the IPF account if it is other than ongoing project. This is mainly content of CSR activity. I think one more point is there, that is impact assessment that we have to discuss. We will see it from here only. Is it? Yes. 84 page number. So CSR, okay. One more thing is, if you are in the Indian company, you should do all the CSR activities near to your company. If you are in Bangalore, try to do it in Bangalore. If not able to do it in Bangalore, but do it anywhere but in India. You can't do it outside India. So CSR refers to any activity specified under section 135, but it excludes activities in the normal course of business of the company. For example, you are into a paper manufacturing industry, West Coast paper mills industry you are. Now, what is your work? Tell me. Cut the trees, manufacture the papers. But the Environment Act says the moment you cut one tree, you have to plant 2 trees. For example, I am telling, I don't know exactly what is there. The moment you plant 2 trees now, there will be some expenditure. You can't put it as CSR activity because that is your normal course of business. Our activities outside India, except for training Indian sports personnel at national or international levels, that is only allowed. And contribution to political parties is also not CSR. Activities benefiting company employees, that is also not CSR. If you give any sponsorships based on activities aimed at marketing benefits, for example, ABC Private Limited sponsoring Tata IPL. Okay, Tata is sponsoring IPL. You can't tell that, sir, cricket is entertainment. No, I don't care. Activities required to for fulfillment of statutory obligations under any other laws in India. If you do any activities with respect to fulfilling any of these things, that is not CSR. You have to do it in addition to that thing. You have to calculate last 3 years profit, average it out, multiply by 2%. If there is any money, contribute. You have to do the CSR. If there is no money, no CSR. What is net profit? Sir, I am telling 2% of average net profit, net profit, net profit. What does it include and what does it excludes? It includes everything, but it excludes overseas profit. Profits from overseas means foreign. And dividend income, dividend from compliant Indian companies under 135. For example, Tata Motors has invested in Reliance Industries. Now, Tata Motors will get some 1000 crore rupees of dividend. Will you consider that 1000 crore rupees as income for or the CSR computation? No, because Reliance would have already included that as profit because dividend is paid out of profit. The moment you take 3 years profit, profit is already including dividend. So if you are getting any dividend from Indian company which is doing already a section 135, that is CSR, then you don't need to include that. 2 things: foreign branch income don't include it, and dividend income if that company is paying doing CSR activities. Net worth, how do you compute it? Paid up share capital, reserves and surplus, only regarding out of profit, security premium, and debit balance of P&L account. Actually, debit balance of P&L account will be negative. Debit balance of P&L account. Less you should ignore accumulated losses, deferred expenditure, and miscellaneous expenditure which are not written off. That is primary expenses, issue expenses, accumulated losses for previous years, you exclude it. Then you get that net worth of the company. So revaluation reserves, right back of depreciation, amalgamation reserves, etc. are not considered because they are not actual things. They are notional part. Then what is I'm just discussing the project definitions. Ongoing project means multi-year project with the timelines not exceeding 3 years. Includes project initially not approved as multi-year but extended beyond 1 year by board with a reasonable justification. Anything which is more than 1 year is multi-year project. Then okay, whenever you spend that CSR activities, you can use it for administration purpose. For example, you are taking one printout, you are going from one place to other place, you are incurring a cab charges that should not exceed, we call it as administrative charges, should not exceed 5% of the total CSR expenditure. If you are required to spend 2 crores, 2 into 5 is 10 lakh rupees is the maximum administration expenditure, not more than that. If you get any surplus generated from CSR activities, for example, you wanted to spend it on this school building. For 3 months, there is no activity. You kept it in a bank. Bank gave some 5 lakh rupees of interest on that 50 lakh for 3 months. That 5 lakh also has to be put it back to the CSR activity only. You can't take it and put it for your profits part. Shall not be considered as business profits and shall be plowed back. Plowed means what? Put back into the same CSR project, or if CSR project is completed, you transfer to unspent CSR account and spend CSR policy and annual action plan are transferred to IEPF account. Schedule 7 is IEPF account. If there is anything extra within 6 months from the end of financial year. Whatever IFSC is there, that is not applicable to IFSC public as well as IFSC private companies for 5 years from the commencement of business. Then comes CSR applicability and committee. Every company meeting any one of the following conditions in the preceding financial year must constitute a CSR committee. If you are in, now consider today it is 26-27 starting. In 25-26, if you are meeting any of this criteria, that means you prepare the financial statements now. In that statements, if you fall under fulfill any of this criteria, then for 26-27 you should form CSR committee. What is that? Net profits 5 CR or more, net worth 500 CR or more, or turnover 1000 CR or more. Now CSR committee shall have at least 3 directors, including 1 independent director. Did I tell it is 2 earlier? No, 2 for private company, 3 for public company. If a company is not required to appoint an independent director, at least 2 directors are sufficient. Private company only 2 directors is sufficient. CSR committee also are required to have 2 directors. Foreign company at least 2 persons. One as per 381D and other nominated by foreign company. 381D I don't know exactly, I think it is resident director. Then this is an MCQ point. That means if the amount which is required to be spent under 135 not exceeding 50 lakh rupees. Sir, exactly 50 lakh rupees. Then also not required. Not exceeding ante ಹೇಳಕತ್ತಾರ. If it is equal to 50 lakh is also not exceeding 50 lakh. 50 lakh 1 rupee is exceeding 50 lakh. That is why it is less than or equal to 50 lakh. In both the cases, CSR committee is not required. Only board of directors can discharge that activities of CSR committee. Then board shall disclose the composition of CSR committee. That means which party is there in which committee. They have to tell it. And CSR provisions apply to every company, holding, subsidiary, because holding company is a separate registered company, a separate legal entity. Subsidiary is also separate legal entity. Foreign companies that have a branch or project office in India and meet CSR applicability criteria, etc. Now, what are the duties of CSR committee and board of directors? CSR committee shall do some policies, CSR policies, to the board and specify the activities the companies will undertake as per Schedule 7. What policies we should have and what activities we have to mainly focus. Recommend how much money they have to spend regarding which mentioned activities, and monitor your company's CSR policy. Is it correct there or not continuously? Then the CSR committee must also recommend AAP, annual action plan, to the board of directors, including, sir, in the current CSR money we are going to do in the full year this some 1000 people we used to give the scholarship, all those things we want to do all these things. Annual action plan, what you want to do, you have to explain it, including list of CSR projects, programs to be undertaken as per Schedule 7, manner of execution of such projects, fund utilization modalities and project timelines, monitoring and reporting mechanism for tracking CSR projects, need and impact assessment details if it is applicable. Then in that case, the board of directors can do what? Must approve CSR policy based on CSR committee recommendations, because money has to be approved by the board of directors only, and everything has to be disclosed in the contents of board report and place it on the company's website. Ensure that company undertakes activities specified under CSR policy. Again, you keep on monitor that CSR committee compositions, policy, projects approved by board, etc. How much you should spend? Board must ensure that company spends at least 2% of average annual profits of what? 2% of average net profits of immediately 3 preceding financial years. That is uh, previous year 1 plus previous year 2 plus previous year 3 profit. Formula is there by 3. Why? 3 years is there, right? Divided by 3, this is average profit multiplied by 2% is CSR money. If it is new company, consider only 2 years it has been established, take only 2 years. That means 0 plus 10 plus 20. If there is nothing to take it as 0. CSR spending is based on the profits of the years completed. Preference, generally whenever you want to spend the money, give it to the local areas. If not, you can do it only in India. You can't take it outside India. If the company fails to spend the required CSR amount, that means they spend the shorter amount. Instead of 2 CR, they spent 1.5 CR. Then board must specify the reasons for not spending to the board report, sir, because it is ongoing project or other than ongoing project. If it is ongoing projects, within 30 days from the end of financial year, transfer it to a special unspent CSR account in a scheduled bank. And that money should be utilized within 3 financial years of CSR activities. If it is not spent within 3 years, then do it for what? IEPF, ultimate option, within 30 days of the third financial year end. If it is other than ongoing projects, again IEPF account within 6 months from the end of financial year. This is a separate 4 marks question they can ask. If the company fails to spend, then the penalty is lower of twice the amount required to be transferred to fund or unspent CSR account, or 1 crore rupees, whichever is lower. The officers, 1/10 of the amount required to be transferred, or 2 lakh rupees, whichever is lower. If you do any excess CSR, then you can be set off against the future CSR obligation for next 3 financial year, provided the excess shall not include any surplus generated from the CSR activities. That means bank interest, all those things, that is not considered there. So board must pass the resolution for approving the set off. Sir, how can you do implementation of CSR policy? Either you can do it if it is CSR committee, if not, give it to charitable company, section 8 company, etc. That you can take care. You don't need anything. Either you can do a collaboration also. For example, Infosys is doing with Infosys Trust, in Reliance is doing with Reliance Foundation, everything. CSR reporting, every board report should consist of the annual CSR report as per the annexure 1 or 2 applicable. And foreign companies must also give annual CSR report in their balance sheet. Then this is an important point again, 4 marks question they can ask. Impact assessment. So what is impact assessment? Whatever the activity you are doing, is it correct or not? Is it impactful or not? Or you remember in audit we used to tell that in performance audit, triple P, sorry, not triple P, triple E, effectiveness, efficiency and economy. Effectiveness, efficiency, economy. I know that you don't remember. In audit is when. So you should spend less and get more results. Again, lesser inputs, more outputs, lesser cost. Some 3 things are there. In that case, here also, companies with the average CSR obligation of 10 CR or more in the last 3 financial years shall conduct an impact assessment through an independent agency for CSR project that have outlay of 1 CR or more. That means in any of the 3 previous years, if your CSR obligation is 10 CR or more, consider 24, 25, 25, 26 and 23, 24. In 25, 26 you are supposed to spend 12 crore rupees of CSR activity. Then more than 10 CR. Now in the current year, you are spending on multiple activities. That multiple activities consisting of some project, and that one project only is having a cost of more than 1 CR. Now on that 1 CR or more project cost only has to be done for impact assessment. Whether you are eligible or not is decided based on this thing. Average annual profits of, average annual CSR obligation of 10 CR or more. Once you are eligible, which projects to be put it for CSR impact assessment? Only those projects which are having more than 1 CR of outlay for impact assessment. And or completed at least 1 year before the impact study. The impact assessment report must be placed before the board and it should be attached to the annual CSR report. The cost of impact assessment can be booked as CSR expenditure, but that should not exceed 2% of CSR expenditure or 50 lakh rupees, whichever is higher. Administrative expenditure is 5%. Impact assessment, who will do it? Generally CA, CMA, CS or advocate, anybody do it. You can pay any expenditure for that impact assessment maximum of 2% of CSR expenditure. That means one project you are spending 5 crore rupees. 5 crores into 2% is 10 lakhs. So 10 lakh rupees or 50 lakh rupees. Maximum fees you can pay is 50 lakh rupees for them. Not exactly 50, maximum 50. You can pay 10 also, 20 also, 30 also, it is up to you. That's it about CSR expenditure. 135, very important section. As I told, it is important in CA final also. You read this implementation of CSR policy. Now 132. NAFRA, National Financial Reporting Authority. NAFRA is an authority which is constituted by central government for the purpose of monitoring of multiple things. The main thing is to monitor the audits which are being conducted, those big companies and the auditors who are doing the audit, whether they are compliant with relevant statutes, relevant accounting and auditing standards or not. Everything has to be overseen. Earlier, every standard of audit or accounting has to be issued by ICA itself, but now it has to do it in consultation with NAFRA. If the NAFRA does not tell okay, then it is again kept on hold. That is why NAFRA also plays an important role. It is like the what is this? More powerful than ICI. ICI don't have ultimate power now. ICI can do only what? ICI can do. They mainly examination, giving the results, preparation of study material, all those things they have to. They have ultimate authority. National Financial Reporting Authority. So NAFRA is central government may constitute NAFRA. That's it. What important in that? For the purpose of matters related to accounting as well as auditing standards. The head office of NAFRA is there in Delhi, New Delhi. And what functions that NAFRA has? NAFRA has the following functions. Maintain auditor details. That means any auditor who is doing the audit of body corporate which is governed by NAFRA. First of all, we should see what body corporate is governed by NAFRA. Listed companies are some big companies are governed by NAFRA. Those companies list the NAFRA will maintain. Again, the auditors who are doing the audit of those companies list also will be maintained by NAFRA. Make recommendations to central government on auditing and accounting policies and as well as standards. Monitor and enforce compliance with accounting and auditing standards. Review financial statements of companies. Request documents or explanations from company or auditor. Review auditing working papers, plans, related documents, evaluate audit quality control systems. You remember SQC1 and SA220? The similar way they can do that quality works. Publish audit non-compliance findings on its website. Collaborate. For example, it went to see some company. That company did not comply the accounting procedures, or the auditor did not do audit correctly. They will prepare the observations. They'll publish in the NAFRA website. Collaborate with global and national audit regulators, maybe different countries. Oversee quality of audit services and recommend improvements. Protect the public interest and interest of investors, creditors, and other stakeholders. They can ask this as 3 marks. NAFRA composition. NAFRA mainly consists of one chairperson who is eminence with expertise in accountancy, audit, finance, or law, appointed by central government. And there will be up to 15 members, part-time as well as full-time members. Part-time as well as full-time members. Generally, I think three members are only full time, remaining members are part time. ICA president, ICSI president, RBI representative, central government representative, SEBI representative, every person is there, some economist. Full time chairman and members cannot be associated with any audit or related consultancy firm during their tenure and 2 years post tenure also. That means if you are a full time member of that NAFRA, you can't be an auditor in any firm. As well as after you get retired from NAFRA, then also you can't do audit for next 2 years. Again, chairperson as well as members must declare that no conflict of interest on lack of independence at the time of appointment. See, I am not connected to any audit firm, any company. I don't have any threat to independence, nothing. I am very, very clear. I am an independent person. That has to be disclosed. Again, part-time members include representatives from MCA, CAG, RBI, SEBI, ICI. President will be there. And experts in accountancy and law will be there. So class of companies which are governed by NAFRA are listed companies either in India or outside India. Unlisted public companies criteria are similar to this thing only, that CSR committee. Paid up share capital is 500 CR or more. Turnover is 1000 CR or more. Outstanding loans and debentures are 500 CR or more in the last year. Their profit was there, here paid up share capital was 500. Are special entities like insurance, banking, electricity, ICI, any other body corporates which are incorporated by any act, or any company or body corporate referred by central government in public interest, or material subsidiary or associate of above entities. Sir, what is material subsidiary or associate? Whenever I am a company, if some subsidiary or associate is material, when I will tell whatever my total revenue is there or whatever my total profit is there. See, I may have 20 or 1000 subsidiary also. Out of the total, when I include all the subsidiary and my data, out of which 20% of profit or 20% of assets, if it is coming from only one subsidiary or one associate, then that is called as material subsidiary. 20% criteria. And again, once it is applicable, it is there under NAFRA for 3 years, at least 3 years. Then what penalty and department can do is NAFRA? Imposed by NAFRA, individuals, chartered accountants are there, then 1 lakh to 5 lakh. Or firm of chartered accountants, 5 lakh to 10, okay, 5 lakh, 5 times of fees received or 10 times of fees received. The NAFRA can also debar auditor or audit firm from being appointed as auditor or internal auditor or performing valuation under 247. Minimum 6 months of debarment up to 10 years. And if there is any party who is not okay with the NAFRA order, they can go for appellate tribunal for appealing. Sir, I don't agree for NAFRA. NAFRA is doing something wrong. This is about 132. Is there anything extra in that 132, which we marked as important in the class? Regular notes you might be having that. Nothing. Oh, board report is also pending 134. Hmm? Power? NAFRAS. Power to summon anybody for examination under oath, power to investigate. Powers of civil courts are given for NAFRA. Simply to be more that. Then 134 we'll discuss it too fast. See, anyway, we already know this. Any financial statements or books of accounts or board report has to be approved by board of directors or any person who is supposed to be signing on behalf of the board of directors. So if he has that thing, who should sign it? Either chairperson or chairperson is not there. Two directors, out of which one should be MD. CEO, CFO or CS if appointed. If it is OPC, then one director submission is and to the auditor is sufficient. Audit report, auditor's report must be attached to every financial statements on a signed copy. Nothing. Board report. Board report shall be prepared on the basis of standalone financial statements of the company only. And it should include highlights of performance of subsidiaries, associates, joint ventures, their contributions or overall performance. They should include that extra performances. This is important for 5 marks. What are the contents of board report? Board report must contain web address of company where annual return is placed, number of meetings of board, director's responsibility statement, details of frauds reported under 143.12. You remember more than 1 CR, less than 1 CR. Again, explanatory statement and declaration by independent directors, policy and directors appointment and remuneration, explanations and comments and qualifications reservations made by CA or secretarial audit report, particulars of loans, guarantee or investment which has taken by or given by company, details of contracts or arrangements with the related parties of the company, state of company's affairs, amount of proposed to be carried to reserves, amount recommended for dividends, any change is there from the end of last financial year to the report current financial year, information on conservation of energy, technology, foreign exchange, etc. Statement on risk management policy, including risk threatening, etc. Details of CSR, listed companies and public companies with where 25 crores or more paid up capital. Then they have to compulsorily manner of formal annual evaluation of performance of board, its committees and individual directors. One thing which is there is they should give something called as director's responsibility statement. And what should be the content of director's responsibility statement? So, director's responsibility statement, point number 9, they should consist of director responsibility statement only. This is also important for 4 marks. Applicable accounting standards were followed in preparation of accounts and explanations for material departures. Departure means what? Deviation. Director selected and applied accounting policies consistently, making reasonable and prudent judgments to reflect the fair and true view of the company's affairs of the profits and loss. Proper and sufficient care was taken for maintaining adequate accounting records, safeguard the assets, prevent and detect the frauds and irregularities. The annual accounts were prepared on going concern basis only. For listed company, IFC is correctly established and that is operating effectively also, and that was adequate for the size and the nature of the company. Proper systems were devised. Devised means what? Installed to ensure compliance with all applicable laws wherever it is found necessary and it is operating effectively. Sir, what is internal financial controls that they have to take care? Hence, there are 5 points. 5 points. Adherence to company's policies and guidelines. You should follow company policy and guidelines. Safeguarding the assets. Identify and prevent the frauds and errors. All the accounting records should be error free and they should be complete. And every financial information has to be timely prepared and they should be accurate. These are the 5 elements. This I feel more important. Actually, this is the audit part. In audit also it is there. 5 marks. They can ask this. Internal financial controls. The board report should be, as we know, that the chairperson or at least 2 directors, one should be MD, or for a company with 1 director, only 1 director can sign it. If it is OPC, they can prepare something called as abridged report, that is summarized board report, OPC and small company. This is okay, not so important. They should give details of some other things also. This is about accounts of company. You can go through the examination tips. Done. We'll continue. We almost did 100 pages out of 135. No, not 100. 93. We'll continue. We'll finish up this chapter also. If you want, you can take some 5 minutes break, then we'll do it. We complete it today, then tomorrow we can easily complete the rest of the things. ಏನಾಯ್ತು? ಫೋನೇ ಬಾಡೋಯ್ತಾ? There are the boys. Chapter 10, Audit and Auditors. So it covers all the sections from 139 to 148, which starts from appointment of auditors, that is 139, and it goes up to cost records. Few sections are very basic category section. So the first section, that is 139. So don't worry about the subsections. We'll just discuss what it is there. When a company is there, whatever we discussed till now from chapter number 1 to 9, that is everything is discussed from company and board of directors and company's angle. Now whatever we are going to discuss, it is not from the company's angle, it is from the auditor's angle. Not even auditors, consider it as combination of auditors as well as company, because appointment has to be done by company shareholders, that has to be there. So a company, when it carries out the operations, and after the operations are carried out throughout the year, they prepare books of accounts and financial statements. As section 136, right, tells that every company has to file adopted financial statements with ROC. For the purpose of adoption, they should conduct an AGM. Before conducting an AGM, first of all, the books of accounts as well as financial statements has to be mainly audited, and the audit opinion has to be given by the auditor. That is why what they tell is the auditor has to be appointed by the company to conduct an audit of the financial statements of the entire financial year. Sir, who can be an auditor? What type of auditor is to be there? Everything we are going to discuss now. So, in case of company, we divide the company into two types. One is government company, second one is non-government company. In case of government company, what is government company? More than or equal to 51% is share capital is held by the government group, maybe central, state, combination of central and state, or state and state, etc. Again, when it comes to non-government company, other than government companies are called as non-government company. In case of a government company, the auditor can be appointed in two situations. One is the first auditor, second one is the subsequent auditor. Sir, who is the first auditor? In the year of incorporation, if the auditor is being appointed, that is called as first auditor. In all the subsequent years, second, third, fourth, continuously, that is called as subsequent auditor. The same thing is applicable even for non-government company also. In case of government company, the first auditor is to be appointed by C&AG. Within how many days? Within 60 days from the date of incorporation. If the C&AG fails to appoint the auditor within 60 days, then the board of directors shall appoint within next 30 days. If the board also fails to appoint within next 30 days, then members will appoint within 60 days. When I say 60 days, it is not 60 plus 30 plus 60. It is 60 plus 30 plus 30. Board of directors 30 days is already included in shareholders 60 days. That means board will get 30 days, shareholders also will get 30 days. 60 plus 30 plus 30, totally 120 days is available for the purpose of appointment of an auditor. In case of non-government company, the auditor shall be appointed in case of first auditor, generally by the board of directors within 30 days of incorporation of a company. If the board fails to appoint the auditor within 30 days of incorporation, then members will appoint the auditor by an EGM within 90 days. That means 30 plus 60, that is total 90 days. For government it is 120, for non-government it is 90 total days are available for appointment of first auditor. When it comes to appointed auditor, the first auditor shall hold the office until the conclusion of first AGM. I appointed in the first year, first AGM is conducted at the end of the year, then he will do the audit, submit the accounts, financial statements, and he will get retired at the end of first AGM. Now, once the end of first AGM, if he is retiring, then company has to appoint the subsequent auditor. The subsequent auditor in case of non-government company has to be appointed by members, in an AGM by passing an OR, ordinary resolution. Now the auditor who is appointed in the first AGM of the company shall hold the office till the 6th AGM or 11th AGM. That means the validity period of the auditor is 5 years or 10 years, two terms of 5 years. So that is, if the auditor who is being appointed is an individual person, individual chartered accountant, then he can act as an auditor for 5 years. Then if he is other category, then he can act firms of chartered accountant, they can act for two terms of 5 consecutive years. Now, in case of government company, the C&AG only will appoint the auditor within 180 days from the date of commencement of the financial year. That is, by 30th September, they have to appoint the auditor. The auditor who is appointed by the subsequent auditor who is appointed by the C&AG shall continue to be the auditor for conclusion of next general meeting. They did not tell the period 3 years, 5 years. There is no subsequent auditor rotation concept in case of government subsequent auditor, but it is just an ambiguity point. The C&AG will decide, is it 2, 3, 4, 5, it is up to the C&AG. Now, once the auditor completes his period, 5 years or 10 years period, then he will enter into a concept called as cooling off period. What is cooling off period? For the next 5 years, after completed the audit thing, he can't be an auditor for this company, its holding company, subsidiary company, or associate company. In CHAS, he can't do audit of any of those companies. In case of appointment of subsequent auditor, can a first auditor be the subsequent auditor? Yes, there is an this option available for the company to appoint the first auditor only as a subsequent auditor of the company. Now, if the auditor is removed before the expiry of his term, or if the auditor is resigned before the expiry of his term, removal and resignation is discussed in next section 140. But once there is a vacancy, if that vacancy we call it as casual vacancy. Before the expiry of the term, if somebody goes out, that is casual vacancy. That casual vacancy has to be filled by board of director within 30 days of casual vacancy, creation of casual vacancy. But if the auditor is being resigned, then you should take the prior approval of the members before filling the casual vacancy of the thing. The resigned auditor should give the reasons for resignation to the company as well as to the ROC also. This is with respect to section 139. First auditor, subsequent auditor, audit committee. Okay, if the company is having an audit committee, then audit committee is not mandatory for every company. If the company has an audit committee, they'll recommend who should be an auditor, who should not be an auditor, everything they'll try to discuss with respect to the board of directors. And before you appoint any person as an auditor, better first you take written consent for appointment of an auditor. Yes, I am okay to get appointed as an auditor for your company, and you should ask the auditor that whether he qualified to be appointed as an auditor or not. Sir, what is qualified, what is disqualified, we will discuss in 141, section 141, and confirm that whatever the audits he are doing now, it is well within the limit. As per the act, he can't do any audits which are more than 20 companies in a financial year. So whatever the company is taking up now, it is within the 20 companies limits only. And if there is any proceedings which are against the auditor, that has to be disclosed in the partner of those things. And ADT1 intimation, that thing okay. Rotation is also okay. Okay. Rotation of auditor. Sir, what is this rotation of auditor? The same things. You remember one term of 5 years or two terms of 5 years. After that, he'll enter a cooling off period. Here, one more concept is there extra. That rotation means mainly consider one audit firm is being appointed as auditor of the company. Now they have 10 years to do the audit. Consider I'm as a partner, I'm doing the audit of a company. I did for first year, second year. Can I continue for again third, fourth, fifth, again up to 10 years? The Companies Act tells that, as well as SEBI Act also. No, it creates some threats to the independence. Maybe you become bit familiar with the management, you become too sympathetic to those things. That is why you better to rotate within the firm only. Now consider 3 partners are there. One partner will do for 3 years, again 3 years, again 3 years. It is better to rotate the auditor within the firm. This rotation they are talking about that 5 years cooling off period part. Then some principles are there. Few principles means some examination tested areas are being given here. Consider I am an auditor of ABC LLP. Now I was doing an audit of Reliance company. We did an audit for 10 years. Now after the 10th, at the end of 10th year, I resigned ABC LLP. I joined XYZ LLP. Now can Reliance appoint XYZ LLP as an auditor? As a ABC LLP, that is CA firm, ABC LLP, CA firm, completed 10 years. I was a partner in the ABC LLP. Now, I resigned ABC LLP. I joined partner as an XYZ LLP. Now, can the Reliance company appoint XYZ LLP as an auditor? No, because the common partner are this thing. And there is one more concept called as same network concept. If you are under any same network in audit fee, you should discuss that. With respect to fee, you should not charge any non-audit fee more than 1 times or 3 times of the total audit fee is being charged. I know that I should not tell audit subject here because you don't even remember law. Going for audit is so much. So what is this same network rule means? Consider the big fours are there, EY, Deloitte, all those things. They are not CA firms. There are some companies are private, what is this, LLPs, which are there in worldwide. They command or like CA firms like us will go and associate with the big four, that is EY. One more firm is also there, one more firm is also there, who is using the name of EY and doing the audit, and they'll pay some shares to the EY for using for brand name. Now I am doing an audit, one network firm of the EY. I completed my duration. After that, one more network firm of the same EY can do the audit of the same company. No, not possible. When you are a firm of the same network, all the firms of same network are disqualified from appointing an auditor in the cooling off period. If it is applicable for you, then everybody it is applicable. This is about 139. Here one thing which I feel important is this thing. 5 marks question, they may specifically test it. Appointment is okay, but here circumstances where retiring auditor cannot be reappointed. A retiring auditor cannot be reappointed if the proposed auditor does not meet the qualifications under 141, or the auditor is disqualified under 141(3) and 141(4) or section 144, giving the prohibited services, or the auditor has given written notice stating that do not wish to be reappointed. That means I only told that no, I don't want to be part of your audit, company auditor, then leave me. Or auditor has not provided written certificate confirming that appointment or reappointment within the 20 company limit of 141(3)(g. Or company has passed a resolution at the AGM that either appointing another auditor in the place of retiring auditor, or you are specifically explicitly telling that retiring auditor will not be reappointed. Under these situations, retiring auditor will not be reappointed. You should remember these points. 5 points are there. Then this can be an MCQ point, maybe so many people ignore it. If no auditor is being appointed or reappointed at the AGM, then whatever the existing auditor is there will continue in the office. Sir, the existing auditor already completed 5 years. I don't care. Still you continue the office until unless the new auditor is being appointed. That one exception is there for everybody. This is section 139. Then we'll discuss some small sections. Section 142. What is 142? Remuneration to the auditor. Sir, what is the remuneration to the auditor? There are 3 things which we put it as remuneration for the auditor. One is agreed fees, or we call it as fees, plus out of pocket expenses, OPE, and plus any benefits given. For example, we agreed, me and Reliance, that sir, we will pay 50 crore rupees as audit fees. Okay, 50 crore rupees plus for the purpose of traveling from Bangalore to Mumbai, I took a flight, or we booked something, cab, something like that, then that is out of pocket expenses. And other benefits, when we landed there, they gave their guest house, or they gave their car for the purpose of traveling. That is also value for the company. So they'll put it everything as a auditor's fees category only. So all these 3 considering is called as audit remuneration. Remuneration rules shall be fixed at the general meeting. That means generally appointing authority will fix the remuneration for the auditors. If the board directors appoints the first auditor, then board only will fix the remuneration. What is the remuneration includes? Audit fee, expenses incurred during the audit, and facilities provided to the auditor by the company. But it will not include any remuneration which are given, paid for other services provided by the auditor at the company's request. For example, company told, sir, we have to file GST return, our auditor did not come. You please do this one work also. Now you take 50,000 fees. You do that work, that is not part of audit fees. That is a separate fees which has to be excluded from that part. Then 144 is also important. Many times it is being asked. 5 marks question. See, once you are doing the audit of some company, you can never give some services for the same company. See, I am not telling you can't give these services. I am trying to tell that if you are already an external auditor or statutory auditor of that company, you can't be giving these services. Without becoming an auditor of that company, you can give any services to that company. We don't have any problem. So an auditor of the company, maybe auditor of holding company or auditor of subsidiary company cannot provide some 9 services, maybe 8 services. Nine ಅಲ್ಲ 9 ದ್ರಾಗೇನು ಇಲ್ಲ. What are those services? Accounting and bookkeeping services. Why? Because if you are only preparing the accounts, if you are only becoming the auditor of the company, what the nonsense you are trying to do it? Maker and checker concept has to be different. That is why you can't give the accounting and bookkeeping services, because you are going to checker. Internal audit services, no, you can't be a same auditing of this thing, because why? It creates something called a self review threat. As an external auditor, you consider you did the internal audit, company appointed you only as an external auditor. In the external auditor, when you are appointed, you found out some 100 mistakes. Do you think will you going to tell it to the company? Definitely not, because you only did the internal audit. What the nonsense you did here? You did not do the work. That is why external auditor is finding out. That is why self review threat will be there. Self review threat. Or you can't do the designing and implementation of financial information systems. That is like accounting softwares, all those things. You can't give those services. Actuarial services also can't be given. Investment advisory and investment banking also can't be given. Outsourced financial services and management services. These are the 8 services an auditor cannot give to any company in which he is an auditor. Sir, but in remuneration which we discussed, you told auditor remuneration does not include payment for any other services provided by the auditor at the company's request. Company requesting for some services, you give that service, you charge the fees. Okay, that is not part of audit consideration, I agree, remuneration. But first of all, can you give that service? If the company is requesting any services which are specified under 144, definitely you should not give those services. Other than 144 services, if the company is requesting you, then you can give those services, and the money which is receiving, it is not part of remuneration of the auditor. That is what it meant to be. Any other services which are prescribed by the law? If a person engages in any of the above services, they can't be appointed as an auditor for the same company or same group companies holding associate or subsidiary. However, if the proposed auditor withdraws from providing these services, they can become eligible for appointment after withdrawal. That means you come out from all those things, you become this thing. Then 145 tells that whenever you complete an audit, you should give an opinion. We will discuss under 700 series in audit. Every auditor's primary responsibility is to express an opinion and give the audit report. In that audit report, you should definitely sign and give that audit report. You can't directly take it print out and cannot give it. So the appointed auditor shall sign the audit report and any other document, and any qualification, observation, adverse comments in the audit report shall be read out at the general meetings. If he feels in key audit matter he identified something, in emphasis of other matter identified something, or other matter identified something, then you can read out those things in general meeting. Audit report shall be open for inspection by any member, because it is like a register of the company only. Then 146 is auditor to attend the general meetings. So every auditor has the right to attend the general meeting whether he gets the notice or not. I know that it is the duty of the company to send the notice as per 101. Send all the members, debenture holders, auditors, directors, everywhere. Even though you did not get the notice of general meeting, you have a right to go and attend the meeting. It is a right of member, auditor to attend. Auditor has the right to receive all the notices of general meeting, even if the financial statements are not being discussed. That means, sir, we're discussing something else, appointment of somebody else. We are not discussing financial statement. I don't care. I want to be part of your general meeting now. Yes, you have a right. And attend the general meeting. And the auditor must attend the general meeting either in person, or he can give any authority to other representative who shall be qualified to be an auditor unless otherwise exempted by the company. That means if you can't go as a person, so send one of your partner to go and sit in the audit, but you can't send the article assistant, because article assistant is not an auditor. Who can be an auditor? He is a CA plus holding certificate of practice, can be an auditor of the company. Then 147, punishment for fraud, sorry, contravention of any of the section for company and officers. If the company violates any provisions under 139, 140, everything up to 146, for company 25,000 to 5 lakh rupees the fine. For officers OID 10,000 to 1 lakh rupees. Penalty for the auditor for unintentional contravention. That means you did not sign the audit report, you gave it, you received the notice of general meeting by mistakenly you thought something else was the date and you did not attend. In that case, 139, 143, 44, 45 unintentionally, 25,000 to 5 lakh rupees, or 4 times of the remuneration, whichever is lower, will be the fine for the auditor. I think you should not read 147 only, but you try to remember one or the two parts. Penalty for auditor for intentional or fraudulent contraventions. If the auditor willfully violates provisions to deceive the company, willfully, shareholders or creditors or tax authorities, imprisonment up to 1 year and minimum of 50,000 or maximum up to 25. See, look at the language, it is and. It is also and 25 lakh rupees or 8 times the auditor's remuneration, whichever is lower. If you look at the here, for unintentional 25,000 and 25,000 up to 5 lakh or 4 times the remuneration. Here 50,000 to 25 lakh or 8 times the remuneration plus up to 1 year jail. Some other liabilities are also there. Additional liabilities for fraudulent auditors. If an auditor is convicted, what is convicted? Held guilty in the court of law for fraudulent practices, guilty. He must refund any remuneration received by the company to the company first, must pay the damages to the company, regulatory bodies, members, creditors, losses caused by misleading audit reports, and there is some civil or criminal liability for audit firms. It is for the firms. If a partner is found guilty of a fraud, abatement, collusion means mixing with the, coming to common conclusion with this thing, liability is jointly and severally on guilty partners and the audit firm. Criminal liabilities in criminal cases, only the partners involved in the fraudulent face penalties other than the fines. The NAFRA also has the power to examine everything. Under 132 only we discussed, it has the right to go through every audit report of a company which is subjected to the NAFRA rules and regulations. Then 148, we will discuss 148, important sections of 141, 43. We will discuss in tomorrow's class. So what is 148? 148 is mainly talking about cost records as well as cost audit. For every company, do they need to maintain the cost records and cost audit? No, it is not required. For the purpose of that, we divide companies into regulated and unregulated or non-regulated. What is it? Regulated sector and unregulated. Non-regulated sector. There are I think 6 regulated sectors and 33 non-regulated sectors. I did not give the list because that is not important. I just gave the thing. Here it is, we call it as table A, here it is table B, where there are some sectors. For example, petroleum industry is there, sugar industry is there, cement industry is there, some medicine industry is there in regulated sectors. So if you are any of this criteria, regulated or unregulated sector, and your total turnover is 35 crore rupees or more in any financial year, that means I am talking about both the companies. Total turnover is more than 35, more than or equal to 35 CR. Then you should maintain cost records. Should maintain what? Cost records. Don't need to do that, just maintain the records of cost per unit, total cost, how many units produced, everything with respect to cost. But you are a company where having the regulated and non-regulated sector. Regulated, if it is regulated, then here it is not given, but I'll try to write it here. Your turnover, total turnover in 1 year is more than 50 CR, more than or equal to 50 CR, and it is not or, it is and individual or group of similar goods turnover is more than or equal to 25 CR. ಯಾವುದಾದ್ರೂ ಒಂದು ಪ್ರಾಡಕ್ಟ್ ಇಂದ 25 ಕೋಟಿಗಿಂತ ಜಾಸ್ತಿ ಬಂದು ಇಲ್ಲ ಒಂದು ಪ್ರಾಡಕ್ಟ್ ಇಂದ ಗ್ರೂಪ್ ಇಂದ 25 ಕೋಟಿಗಿಂತ ಜಾಸ್ತಿ ಬಂದು ಟೋಟಲ್ ಟರ್ನ್ ಓವರ್ 50 ಕೋಟಿಗಿಂತ ಜಾಸ್ತಿ ಆದ್ರೆ ಟೋಟಲ್ ಮಾಡಿ ದೆನ್ ಯು ಶುಡ್ ಡೂ ಸಮಥಿಂಗ್ ಕಾಲ್ಡ್ ಅಸ್ ಕಾಸ್ಟ್ ಆಡಿಟ್. If it is non-regulated sector na, then nothing change, just replace it as 100 CR and 35 CR, whatever it is there. Instead of 50 and 25, just replace it as 135 crores. Sir, who can be a cost auditor? Only a CMA who is holding certificate of practice can be a cost auditor. It includes firm of cost accountants and LLPs, cost accountants, etc. So any person who is doing the audit under 139, statutory auditor, cannot do the cost audit of the company. So the rights and duties of the cost auditor are similar to rights and duties of the normal auditor of the company. Here cost auditor will be appointed within 180 days from the beginning of the financial year. Within 180 days from the beginning of the financial year. That means by 30th September they have to appoint, not 30th September. Maybe some 1 or 2 days here, because 30th September is 6 months. April has 30 days, again May 31, June, July 31, August 31, September 30. That means September 29, maybe 180 days. Within 180 days, he should be appointed by the board of directors, and he should be in the office as a cost auditor until the conclusion of next AGM or until the giving of cost audit report. He will be in the office. Once that is done, again company will appoint or this renewal, or they can appoint somebody else. Then the report has to be given for board of directors, not to the members. And the remuneration is also fixed by board of directors only, because the appointing authority only will fix that. If there is any casual vacancy, again board will fill that casual vacancy within 30 days of resignation or removal of the cost auditor. What they have to maintain the cost records, materials, labor and other cost elements, maybe cost per unit, total cost, entire thing that has to be maintained. Cost audit report should be given board of directors, and cost auditor shall follow cost accounting standards issued by CMA, approved by central government. Within 30 days of receiving the cost audit report, company shall submit it to central government with the explanations, etc. If there is any non-compliance, company and officers punishable under 147(1), just now we discussed. And for cost auditor, 147(2) and 147(4), that criminal act and all those things are there. So we discussed 139. Removal we did we discuss? Removal resignation. Okay. 142 we discussed. 144, 5, 6, 7, 8. So 140, 141, 143. 3 sections are remaining. They are very important. We will discuss in the next class. If you have anything to ask from the discussed topic, you can ask. Do revise it on after the class immediately. Don't keep it pending. Today is Hanuman Jayanti, yeah? Hmm. Rotation of auditors. There are two types of rotation. One is applicable to the entire period. For example, if you are an individual auditor, you completed 5 years of audit. You have to go out. That means you are rotating. Somebody else will come in your place. You are going for 5 years cooling off period. If you are firm of auditors, you are going out again. One more firm will come in your place. Your cooling off period is 5 years. After that, you can be reappointed. One more rotation is rotation within the firm. If you are a firm having some multiple partners and consider 10 years is the period, as a single partner, don't be an auditor for the same company for all the 10 years. Because you might be becoming close to the or this members or company directors, all those people. That is why this Companies Act as well as SEBI also tells that secretarial standards also tells once you are done, rotate the auditors. That means you are firm only do the audit, but you don't sign it. Let the other partner of the firm will come here, do the audit, and let him sign. After 3 years, again, if you want, you can come back. At least you have some gap of 2 years, 3 years. No, firm is only 10 years. 10 years ಒಳಗಡೆ ನೀವು ಮೂರು ವರ್ಷ ರೊಟೇಟ್ ಆಗಿ ಒಳಗಡೆ ಇರೋರು. ಯು ಡೂ ಇಟ್ ಫಾರ್ 5 years 5 years. ಇಬ್ಬರು ಪಾರ್ಟ್ನರ್ ಇದ್ರೆ ಫಸ್ಟ್ ಆಫ್ ಆಲ್ ಲಿಸ್ಟೆಡ್ ಕಂಪನಿ ಅಪಾಯಿಂಟ್ ಮಾಡಲ್ಲ ಅವರು. ಸೊ ದಟ್ ಈಸ್ ಅ ಸ್ಮಾಲ್ ಕಂಪನಿ ಇದ್ರೆ ಒಬ್ಬನೇ 10 years ಮಾಡಿದ್ರು ಪ್ರಾಬ್ಲಮ್ ಇಲ್ಲ. ಜನರಲಿ ಇಟ್ ಶುಡ್ ಬಿ ನಾಟ್ ಅ ಸೇಮ್ ಪರ್ಸನ್ ಫಾರ್ ಕಂಟಿನ್ಯೂಸ್ ಇಯರ್ಸ್. ಹಂಗೇನು ಇಟ್ ಈಸ್ ಅ ರೆಕಮೆಂಡೇಟರಿ ಮೆಜರ್, ನಾಟ್ ದ ಕಂಪಲ್ಸರಿ ಮೆಜರ್. It is better that your independence is not getting affected if you rotate it on a continuous basis. If not, your independence might get affected. That's it. No, not fault. It is correct only. It is not, or this, I told it is not compulsory. It is a recommendatory suggestion given by the institutes. That's it. If you have anything, you can ask. If not, we'll stop it here. So remaining part, anyway, we will complete tomorrow's class. And then guys, you understood? If you like this video, do like, share, and subscribe. And if you have any questions, you can contact our academy directly with where the number is available in the description. If not, you can drop the comment in the comment box. I'll immediately contact back to you. We will reply it. So please make use of these marathons. Till then, till tomorrow, see you. Tata, bye bye. Generally, firm LLP firm appoint ಮಾಡುತ್ತೆ. At least they have category internal category company ಇದೆ some 10 partners, 20 partners, 30 partners ಇರಬೇಕು. 1-20 ವರ್ಷ ಎಕ್ಸ್ಪೀರಿಯನ್ಸ್ ಇರಬೇಕು. ಜನರಲಿ ದೇ ಗೋ ಫಾರ್ ಬಿಗ್ ಫೋರ್. ಲಿಸ್ಟೆಡ್ ಕಂಪನಿಗೂ ಸಿಂಗಲ್ ಆದ್ರೆ ಪರವಾಗಿಲ್ಲ, ಬಟ್ ಅದು ಹ್ಯಾಂಡಲ್ ಮಾಡೋಕ್ಕಾಗಲ್ಲ. ಮಾಡ್ಬೋದು. ಇಟ್ ಇಸ್ ಅಪ್ ಟು ದ ಕಂಪನಿ.